Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, welcome everyone. Good morning. Thank you for joining Stocks Network Trading. My name is Ron. My partner is Dave. It is 6 a.m. Eastern on this beautiful Friday morning, August 29. Thanks everyone. Welcome. Happy Friday to everyone. Juma Mubarak. And so we're wrapping up. This is the end of the week. We hope that you've had a great week so far with SST, and we hope that you're learning and earning and analyzing every single day and getting better and better and better at this. So it takes time, but you guys are doing amazing. So let's keep it up. And just to remind everyone, it is Friday. Just be careful trading on a Friday. Fridays are usually traditionally those difficult days, the Monday and the Fridays, because we're going into a weekend, and Mondays are tough as well because sometimes we're coming out of a weekend. Okay, and just Monday is a U.S. bank and Canadian bank holidays for Labor Day, so I don't advise that you guys should be trading on Monday. With the U.S. banks being closed, if you do decide to trade, spreads might be a little bit higher than normal if you're trading with Forex. It's recommended that you do take the day off that day, but if you want to go in the markets and analyze, do some back testing and things like that, but markets will pick up on Tuesday morning. So I'll let you guys know on the schedule for Monday if we come in and maybe do like an education session, or do like answer some questions and things like that, more so than just a trading session. Okay, if not, then maybe just take the entire long weekend, relax, enjoy yourself, recharge, and we'll be back at this on Tuesday. But just putting that out there to remind everybody, because sometimes we forget about these things. And it's important to take those days off when the U.S. banks are closed, okay? Because it could be one of those choppy days, okay? So thanks everyone for joining. And plan for today's, we're going to go over today's news. We do have some U.S. red folders today at 8:30, and then we'll go into Wall Street, and we'll see how everything is moving. We'll do what we normally do here. We'll take a look at gold, US30 and NASDAQ. And then maybe next week we'll have some polls, and we'll do some other things where you guys can let me know what securities you guys want to look at, okay? So thanks everyone. Let's get into this. Let's get started with just looking over today's news, okay? So it is Friday, August 29. We've had some news coming out of Europe. We had some German news, some French news, some Spanish news. All throughout Europe. It's already gone by. So if you were trading the European London session, maybe you guys can let me know how it was. Was it good trading volume? Was it a little choppy? Because now all of the volume from Europe is now coming into North America over here. And just reminder for those that are new, 8:20 a.m. Eastern is COMEX market open. That's commodities exchange, and that's when we're looking at gold and seeing how the COMEX market opens up. Then 10 minutes later at 8:30, we do have some high impact news. Okay, in Canada, we've got our GDP month over month. But more so, we look at the US folders. We have a US red folder, core PCE price index month over month. So the previous month in July was 0.3% was the actual number that came out. And the forecast is very similar to last month at 0.3. So we'll see if this is an increase or a decrease when they release the actual results at 8:30 a.m. So if we just click on the folder, we can get a little bit more information as to what this folder is. If you don't know what core PCE price index month over month is, if you click on the folder, it'll give you some information about it. So it comes from the Bureau of Economic Analysis. It is a change in the price of goods and services purchased by consumers. excluding food and energy. So whenever we're talking about the word core, it's always excluding something, okay? So this one is excluding food and energy. So it's pretty much everything else, a change in pricing goods and services purchased by you and I, the consumers. We do most of the purchasing around on a day-to-day basis, and this will give us a reading from month over month, but excluding food and energy. So an actual greater than forecast is good for the particular currency, which is the US dollar in focus here, and we'll see what the actual results are. So just some notes on this. It differs from core CPI in that it only measures goods and services targeted towards and consumed by individuals, okay? Why do we care? It's the Federal Reserve's primary inflation measure. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for the inflation containment mandate. So this, going into this type of news, going into September's next FOMC with Powell, this is what they look at. They look at all of these type of numbers, these folders, because it could affect the way how they do their interest rates. So it's got a high probability, above 90% right now, that September could see a possible rate cut in the US on that FOMC of a quarter basis point to a decrease. So, but these things can, if they come out with some numbers that they don't like, it could change that going into September, okay? So that's in focus today. And then right after we get core PCE price index, then there's a few more US folders. You can see that there's 4 more that will all be released at the same time, but they're yellow. So yellow indicating lower impact. They'll still have a significant impact because they're all released at the same time. So we just got to trade careful at this time, okay? And this is where you have to really mind your risk management, especially on a Friday. This is where you kind of got to look at how you've been trading this week. Unfortunately, guys, I had some messages last night from some of the snipers in the group. I'm kind of sad because they told me they've hit their weekly goals and they're going to take a extra long weekend, and were wishing me a good weekend as well. So I'm going to miss you guys, but I'm actually very, very happy for you guys that you guys are taking a Friday off and you guys can enjoy the fruits of your labor trading. And I hope more and more and more of us can start to get that feeling. Maybe you'll hit your weekly goals early and you can take a Friday off, okay? And then you don't have to stress yourself out trading these tough Friday days that normally are very difficult for retail traders to navigate. Why? Not just because of the volume, not because of how there's news or no news, more regarding the psychological aspect of trading, more the emotions. You know, I don't know what it is, but sometimes just on a Friday, you tend to trade different than you do on a Tuesday. You tend to kind of maybe throw out all your rules and discipline out the window because it's a Friday, and maybe that little inner self is telling you, I gotta make some more money. I gotta make some money because it's the weekend, and I don't know what it is, but if we do a poll on most retail traders, Friday is probably the most difficult day, and it could be just something like that. It's not knowing how to just walk away on a Friday, and so you could do some silly things and get greedy on these Fridays and give up everything that you worked hard for all week, and then you got to go through the weekend thinking about that, and then you got to start your next week off on a negative note when we want to start off on a positive note every week, okay? So these are things that we need to work on as retail traders. I have to work on it myself, just like you guys. So just getting better and better at Fridays and how to know and navigate around these markets with experience. Same with on Monday, when I told you that the US banks are closed for that holiday. That's where more experienced traders take a day off there because they have traded those US bank holidays, and you know, they have noticed over time that there's not the greatest volume. It's very choppy. Spreads are not in your favor. So it's difficult to trade those days. So why not just avoid it? You know, it's just one day. You know, the markets are open Monday to Friday every single day, but once in a while there's going to be some bank holidays where you got to take a day off. Okay, so I don't want to rant all day about these things, but it's good to talk about because it's normal for traders, okay? So, but for our beginner traders, it's good to learn these things early so that you don't have to spend multiple years like us trying to figure these things out. And we're trying to make it easier for you guys, okay? So just try it, just try it. And then you might say, wow, I understand what that guy is talking about on YouTube. Okay, and then there's some more news. Then we move into Wall Street, but those low impact folders, we have a goods trade balance. We have a personal income month over month. It looks like personal income is going up from 0.3 to 0.4. It looks like their forecast for personal spending. That's not good. Like, even if our income is going up, but if we're spending more, we're kind of negating our income. So it's like if we make $1 and then we go out today and we spend $2. Yeah, we're making money, but we're spending more than we're making. So again, we're going in the net negative, so it's great that personal income is going up, but it's not good that our personal spending is going up in the US. So you can see it's a substantial increase. Last month it was 0.3%. They're forecasting an increase of personal spending to 0.5. That's almost double in just a month. So that's a lot. Like, when we're talking about personal spending, these numbers should be going down, right? So we'll see what those numbers are when they come out. And then we have the preliminary wholesale inventories at 9:45. So you can see when Wall Street opens up this morning at 9:30, 15 minutes later, we have the Chicago PMI coming out. Then at 10 a.m., we do have our revised University of Michigan Consumer Report. I know we don't have any more news this afternoon, so it's just going to be a normal trading day on a Friday. Be careful. Could be those trap days on Fridays. Where sometimes it always looks like the way how it's moving all week, where let's say it's getting overbought the entire week, and we're telling ourselves it's a Friday, the markets have to sell off, they gotta sell off, it's a Friday, they can't keep going to these all-time highs and things like that. So then we keep selling, and then the market just keeps pumping and pumping and pumping, and we blow our account on a Friday because we're trying to short it when it's continuing to just squeeze to the upside. So got to be careful. Same with if the market has been selling all week and it's got to bounce. There's got to be some buyers come in at the end of the week, and then we buy, and then it just keeps dropping further and further down, and then we just start revenge trading. We start getting angry, and one thing leads to another, and then we go through that vicious trading cycle again, and we start doing some bad things to our accounts. Okay, guys? So just be careful. You should be learning now how to navigate through a Friday. If you hit your daily goal, get out of here. I'm saying that with respect. If you hit your daily goal early, just get out of the markets. I appreciate you guys. Just leave us a like and subscribe to the channel, but go on with your day, okay? That's just some advice. Hopefully you guys are starting to understand why I'm preaching this stuff like pretty much every single Friday, okay? And then just to show you guys going into the weekend, and right over here Monday, if you guys trade London, Europe, the banks are open. London is going to be going. Maybe Monday, who knows? Maybe we'll have a live London session for Monday. I'll let you guys know, okay? So maybe that's what we'll do. Maybe we'll have a live London session. We'll start it at 2 a.m. and we'll go till about 5 a.m. And we'll go through these European folders here. But then you can start to see as we move into the North American session right here. In Canada, we have an all-day bank holiday, and more specifically in the US, they have their bank holiday, okay? So maybe we'll do that. Maybe a live London session, and then we'll take it easy on the holidays, okay? And then we'll be back Tuesday, regular hours, okay? So that's our news, guys. Also, over the weekend, prepare yourself for the news next week, because I see September 1st, okay? So we're starting a new month next week. So I always say the first Friday of every month is a big day. So let's see. Next Friday, there it is. We have our NFP, non-farm payroll. Okay, so that's a big event. Look at all of the red folders. And look at our number from remember how our job creation numbers month over month, remember how low these are getting? Look at it's at 73,000 from the previous. I remember it was like 150,000, and then the number actually came in and it was 73,000. So we'll see what their forecast is, and we'll see the actual numbers. So that's next week is NFP Friday. So guys, that's how we can prepare for next week, okay? Earnings wise, just the big name this morning was Alibaba. They reported, and not much in the pre-market earnings wise. In the after hours, I don't think we have anything. Normally, we only have maybe one company reporting on a Friday evening. Normally it's like this, no companies. What I would do now is get ready over the weekend to start looking for next week. See Monday how everything is closed, all bank holidays. So Wall Street is closed, but US banks are closed. So we have no pre-market earnings on Monday and nothing in the after hours. Tuesday, little light day again, 4 in the pre-market, 3 in the after hours. We start to pick up a little bit on Wednesday with 7 corporations reporting in the pre-market, 14 after the close. And Thursday, we got 14 pre-market and 21 after close, okay? And then you can start to click on the individual days and look at, again, are they which names are you familiar with? On Wednesday, the 7 on the pre-market, are they any big names that you're familiar with? In the after hours on Thursday, like we had NVIDIA this week, is it any of those big names that you're familiar with? So that's what kind of I do on the weekends to prepare myself for the week. Maybe we'll do a weekend call together as well on how to prepare and what to look for preparing yourself for the next week of trading, okay? And then over here, just in the news, Trump's tariffs are in the news every single day lately. Trump's tariffs force countries to choose between US or China. So, that's some countries are doing that. They're choosing to trade between US or China because China doesn't have too many tariffs. So, they're weighing their costs and things like that. So this is going to affect trade in the next little bit, these tariffs. So as trade wars intensify, nations from India to Mexico aren't necessarily destined to choose the U.S. And someone will say, well, that's their loss. They're not trading with the U.S. Who cares? It actually does have a big impact because India and Mexico are pretty big countries and do a lot of trade with the U.S. So, you kind of don't want to lose that trade. But we'll see what happens with this. But these tariffs, they're nothing new now. They've been going for months now. So the market has maybe already factored this in, has already baked this in, and now we're just continue to move, chug along here, unless any unnecessary tariffs, like big high numbers come in again, like when threatening China with over 100% tariffs, like those are getting out of control numbers, so that could affect the markets. 10, 15, 25%, okay, maybe the market has baked it in and wants to just continue moving forward with this. And so what do we have today? U.S. stock futures sync with Fed-favored PCE on deck. So that's coming up at 8:30. We just talked about that. Marvel had their earnings the other day. So Marvel stock slumps as outlooks stokes AI chip worries. What else we got going on here? So I'm not going to read through everything. Caterpillar is a pretty big company, and it's a company that is traded in Dow Jones. So if you trade US30, Caterpillar is a name in there. And Caterpillar now expects a 1.8 billion tariff hit this year. So almost 2 billion. They're already projecting this, that Caterpillar is going to take a $2 billion hit due to tariffs. So that could have an impact on how Dow Jones moves in the near future. Okay, so China price war puts Alibaba under spotlight before earnings. So that's in the pre-markets. They've probably already reported. What else we got going on here? Okay, so China's Alibaba develops a new AI chip to help fill NVIDIA's void. So competition is starting to increase now. What else we got? U.S. bank shares tumble on fears of a tax raid on the sector. Okay, so that's in the news. Maybe you want to read that article right there. And that's what we got going on, okay? And so right now in the futures, S&P 500 is negative red 0.35% right now. Dow negative 0.37%. And NASDAQ is taking the bigger hit at negative 0.5% right now. Gold is steady, negative 0.12%. And we do have a little bit of volatility in the VIX volume indicator over here, okay? Guys, our Discord channel, we sent out a couple signals yesterday. So there was a signal sent out on NASDAQ for a buy. You can see how you can use this static level, throughout the day. That's what we talk about always on these calls. 23,550, psychological number. Starting to look for some volume close above. Can get a retest in there. Again, this was, Wall Street right over here. Came down, came up, but continued to build and then continued to make those higher highs, come back down, higher lows. We're still holding about 50%. That point of control of that big bar right there, if you stretch it across and see that it's still moving up. So that was a way when we were trading yesterday to maybe look for 150 plus pips on moves like this, okay? So let's see what we got going on here. News-wise, gold is in the news. So we have some sentiment on the commodities, on gold, crude oil, silver. So gold prices experienced a slight decline in the last 24 hours, hovering around 3,407. In the bullish case, we could see a potential rebound as investors seek safe haven assets amid global economic uncertainties. On the other hand, in a bear scenario, further downward pressure may persist if the US dollar strengthens, reducing the appeal of gold as an alternative investment. So keep an eye, on your US dollar index and see how it's going. And there's all kinds of sentiment for USD, JPY, the pound dollar, euro dollar, if you're trading currency, crypto. We got on Bitcoin. Bitcoin's taking a little bit of a hit. We'll see if it revisits maybe 100,000 again, that psychological number. We'll see how it trades over the weekend as well. But there is a lot of selling pressure since it broke that all-time high of 124,000. So it's not like, I already saw some people are saying Bitcoin is going to crash. That's it. It's game over. I've heard that over and over and over and over on all type of securities. I've heard market crashes since I started trading it when I was a very young kid, and it's always an opportunity every time I see it. Yeah, the markets, they drop, but there's always building that higher low, and somehow it keeps making higher highs over the years, guys, okay? So I don't think the markets are crashing anytime soon. Pullbacks are necessary in order to continue to go higher, right? So it's part of the trading cycle. Okay, and then we also have some sentiment report on Dow Jones, NASDAQ, and DAX over here. Okay, so that's in our Discord Signal Trade Idea community over here. If you guys want to join this, we'd love to have you guys on here. And this can help you maybe as like an extra confirmation when you're doing your charting. Maybe we see something exactly you're seeing, and maybe we take the trade as well. Okay, and guys, this is our free Telegram channel. It's pinned at the top of YouTube for you guys. Here's our YouTube trading link over here for you guys. Thank you to the snipers on YouTube for your comments. We do appreciate them. Thank you, guys. We're going to continue to be here with you guys as long as you continue to hit the likes, subscribe to the channel. Thank you. There's 133 viewers right now just listening to me mumble right now before we get into the charts, but we do appreciate each and every one of you guys, as we do everyone in the Zoom. Thank you, guys. We're all one team here. We do appreciate you guys. Remember, I've been talking about, guys, when I give you like some names, just add them on your watch list. Don't go and just say trade them blind. Just add them to the watch list. Remember, I was talking about a month ago about the cannabis sector in Canada and the United States, and one of the big names is right here, Canopy Growth Corporation. So I was also talking about Donald Trump looking to reschedule and decriminalize marijuana in the United States. We already have it over here where it's legal in Canada. We went through this cycle in 2014, 15, 16, leading to our legalization in 2017. And I've seen this process over and over and over. And I'm very, very, very familiar with the cannabis sector and have a little bit of knowledge on this sector over here because I was part of some startups here in Canada when we got things going over here. So now you're starting to see how US is taking this stuff in. So you can see over the last 30 days, this company was trading at $1.50. And now it was trading at $2.50. So that's a 65% increase. I work on percentages. I don't work on dollar figures and things like that, dollar amounts. I've told you that, guys, from day one. I work on percentages, just like how financial institutions, when they report on percentages. Dow Jones is negative 0.3 right now. It's not saying how much dollars or what number. That's when you go in the point system, but more so right here, percentages. So think if you had a swing trade at that time. Now it's at some highs. I wouldn't recommend just buying at the highs. Now you add it to your watch list and you wait for pullbacks. This is a very volatile sector. So it could go up 65% in 1 month and it's right back down to $1.50 after they sell the news, and it's right back down. So do not buy the highs, guys, please. You know, just like when we mentioned Eris Gold, Eldorado Gold, Silvercore and things like that, you don't necessarily buy the highs, but you wait for pullbacks, and then those have gone up an average of 5 to 12%. You know, like American Eagle, when I was mentioning that with Sydney Sweeney, don't just go buy it blind. Take a look at the charts. That's what candlesticks are for. Analyze. That's what watch lists are for. All of these things. But cannabis industry, it's right over here. So US could potentially reschedule and decriminalize, and if they federally legalize, it could be big, because US has a really big population, much bigger than Canada. So these companies could go through their cycle again. And just to give you guys some reference, this company, Canopy Growth, back in the day, 2014, was trading under 50 cents a share, right? And it started off as Tweed. If some of you guys remember this, Tweed, and then they bought out Bedroken, and Snoop Dogg got involved at that time. He was kind of like their ambassador, their sponsor, and things like that. Snoop got some shares, and he was promoting them. Snoop has a line with them with his Tweed products and things like that. If you guys have ever smoked any of Snoop Dogg's weed, it is you can buy it legally here in Canada. He has his own line, but then Constellation Brands is a publicly traded company, one big one. That one trades at $200-300 a share, not at a couple dollars. And they Constellation Brands is behind Corona Beer. If you guys understand Constellation Brands, and they at that time invested $4.2 billion into this company. So it went from, I was watching it at that time, it was like $1, and then it went up to $9 just on that announcement in the after hours. It jumped up from $2 to $9. I was like, oh my God, how did it jump that high from like 50 cents in just a matter of time? Then when Wall Street market opened, when it was $9, it went up that day to $27. Like, it was a massive increase, almost 300% increase. And then there was a tiny pullback, and then it started driving to like 40, 50, 60, 70. I think it peaked at $80 a share. Like, it was unbelievable. But that's when it started to get, you know, into the system, and big companies started investing. And since then, in Canada, the government kind of ruined everything, and it just started selling off. They started doing reverse stock splits, diluting the shareholders, and bringing it right back down to just a couple dollars from all of those reverse stock splits. So maybe it can start to get its pulse back with the US. So just, guys, what I'm saying is add this to your watch list and just watch it, okay? If you're interested in the cannabis sector, there's all kinds of things you can trade in the markets. You can smoke and make some money too, okay? And this was Dave's session right over here, right after us. So Dave got it in with the snipers, and they got a 50 pip sell on US30 during the private post New York session. So, you know, we cleaned up yesterday, and Dave cleaned up, and some of the snipers in the Discord cleaned up as well. So congratulations, guys. You guys are killing it. There's the trade ideas and some results of them, and everything we do here. And also, guys, our blogs are available for you guys. Okay, so let me just get off this Telegram, but that's a free Telegram for everybody here. And also our website, guys, if you want to join us, join the team. We'd love to have you guys, myself and Dave. And everything we do here, courses, some long-form boot camps. If you guys want webinars and you guys want to watch a 2-hour webinar and you guys want to learn something, we have over 100 of them, lots of them, okay? They're all in here. And also our free blogs. We did a few blogs this week to get you guys kind of thinking about NVIDIA's earnings prior to the earnings. We talked about unemployment claims. Why do traders care? Every Thursday morning at 8:30, US releases their unemployment weekly claims. We were talking about ignited candlestick over here. I talk about a lot of it on the live, so maybe get familiar with my lingo, maybe get familiar with my terminology of the candlesticks, and know what an ignited bar is. Please, if you can do any homework over the weekend, study your ignited bars on the charts, okay? And there's multiple blogs for everybody here. So thank you guys. Now let's get into everything. Before we do that, we have 83,322 subscribers. So thank you to every one of you guys. Can we get a goal of getting this for Uncle Ronnie to 420 today? 420. That's my number. Yeah, that would be about almost 100 subs if we can get that today. But we get to that beautiful number of 420 today to end of Friday. So we'll work on that, guys. If you guys can help me out by subbing and we get this number right to where our target is, you know, just like when we're trading, we got to trade to a target. Let's see if we can get our subscribers to a target. Okay. So I'm going to get started with gold. It's early, 6:30. Make sure you guys got some coffee because we're going to be going till after 10. So we got a big session here. So let's get started, guys. Welcome everyone on Zoom. Good morning to everyone. Captain Boom, welcome. Oh shit, Captain, I would like to make a complaint. I hope it's not about me, man. I don't know what I did, but what's the complaint? I am unable to focus on trading properly today after straining something, after laughing a little too much after seeing your YouTube thumbnail. Oh, the Gump, the Forrest Gump one. Yeah, I had a chuckle last night. Dave sent me that. Excuse me. And let me just guess how I'm gonna choke here too. Boom. Yeah, Dave created that thumbnail and sent it to me last night, and I put it on. If you guys see the thumbnail, man, we should do some funny stuff like that. But oh man, Boom! I thought I was worried there when you told me you had a complaint, man. But that's funny. Wayne, good morning, welcome. Mike, Luke, man, good morning, guys. Conrad, Mikey, welcome, guys. I'm well. How are you guys? Samuel, good morning. Red Clues, welcome. Good morning, brother. Crypto will spike with news today. Yep, we'll see. We'll see. We'll see, guys. Hopefully, can put some pulse back into Bitcoin a little bit. Danny, welcome. Ronnie puffing and pumping. Yeah, welcome, guys. And everyone on YouTube, thank you guys for joining. We welcome you guys, everyone. Welcome. Alex Castro, good morning, sir. Jawad, welcome. Welcome, guys. Crypto Russ, welcome. Zoltan, Andre, welcome. Trading with Confidence, good morning. Science Facts, Sean, Tashi, welcome, guys. Aeromac, good morning to everybody, okay? And thanks, guys. Welcome to SST. We do appreciate you guys. Okay, let's get started. We got 160 viewers. Amazing. Hit that like button. Let's get going. Subscribe to the channel. And we're going to do a top-down analysis on gold, okay? So always a thorough, good analysis will help you throughout the day. I'm telling you guys. If you half-ass your top-down analysis, or you just kind of skip by it, or you just, quickly go through it, your zones, your points of interest are just going to be off by a little bit. You can still be very successful as a trader. I'm not saying I know some traders that trade and they're doing really well and they don't even do a top-down analysis, okay? So everyone, can do whatever you want to do, but just think about it. Don't you want to, if we're trading something on a lower time frame, don't we just want to know how it was trading maybe last week, just get a bias, how it was trading, yesterday, who was in control, who had the point of control, and how is it moving today? Things like that. It just helps make trading a little bit more understandable and easier on yourself. So, I can just go on the 5 minutes and start trading right now. I can see it's coming down. It took out this low. It looks like it took out some support. Looks like an M pattern. Looks like it wants to continue to break down. I could start selling right now if I wanted, but I'm starting to see a lot of indecision candlesticks over here, where, the market could pull back up. Yes, it could come right back up a little bit, and then they slam it right back down, and then we start trending down. So that's just me, just looking right now at gold on the 5 minutes and my observation. But I don't know then how it was trading yesterday or the day before, or how it was trading last week, or what the overall weekly trend is. Like those things, I can't see any of that. So what I do is, over the weekend, guys, I go to the monthly actually and the weekly. I'll do a call with us on the weekend one day, and I'll show you guys how to do this, how to prepare for this. We're going to start to do more weekend calls as we move into September, guys. I'm looking forward to those myself. But this weekend is very busy for me because we got to get the kids ready for school because they're going back to school on Tuesday. I can't even believe it. When they told me they're going back to school, I'm like, whoa, already? Like this summer just flew by. And now they're back in school. So it's crazy. But this is now gold. You see, I'm on the 1 day. So every one of these candlesticks represents an entire day of trading. So now we can see an overall bigger picture. Now I'm not just looking from this morning or last night. I can see I'm all the way back to March of this year. Okay, so you can see it's multiple months. And I can see we're in this big bullish flag pattern. Like here was the rally coming up from March and April. And we kind of plateaued up here near the all-time high, and it's been pulling back, but we're making higher lows, higher lows, higher lows, higher lows. And look at, maybe something might happen today or next week. We're getting back right above, right into this kind of supply zone right in here. So it's getting there, guys, you know, slowly but surely. Maybe we're going to start to, you know, trade back into here. However, there could be a significant pullback, you know, like watch when I'm dissecting this. You'll see a lot of the pullbacks are on these Friday, Monday, weekends. And then we also have the bank holiday too on Monday, so do not forget about that. Okay, so also, sorry guys, I know I'm ranting a lot today, but when you're taking a position on a Friday afternoon or today and you're looking to hold over the weekend on a swing trade, you got to consider something could happen over the weekend on a Saturday, Sunday, and even on a Monday, right? And then when the markets open up on Tuesday, you have no control about that unless you have a good swing position, the right proper risk management. But anything can happen over the weekend, especially when you're trading stock market, because the Wall Street will be closed until Tuesday morning unless you have access to some pre-market trading. But let's get into this. Okay, so you can see we pushed up all the way. Our all-time high is right there. I'm going to place an orange line for our friend Donald Trump in America right over here. There is his orange face. All-time high, orange makeup up here at 3,500. And we had a significant pullback since we hit that all-time high. Where did we pull all the way back down? Follow it coming down right there. It came back up. Lower high, it broke for a new lower low, then it really came right back up. There's the double top when I start to do my zone right there, and then they continue to bring it all the way back down. See when it got to here, kind of inside bar, and then they really broke it down. So that's the lowest point. So that's the orange high, all-time high, to our lowest point from the all-time high. If you follow the path, that's how it went down there. And then if you follow this path, it continued to go back in the consolidated range. The buyers started to take it up with a higher high, higher low, higher high, higher low, and it got it right back up here again. And then you can see there's like a big wall up here. I don't even have to draw a red box, and you can clearly see when we get up here, it goes back down. But when we're coming down, did it come all the way back down into here? No, it made this higher low, and then again, high, this trend. Higher high, again it pulled back, higher low, then it came right through here again. This is when we kind of should have really broke through here, but it didn't. Notice the day, a Tuesday and a Wednesday midweek reversal. Then the next week, again, the sellers were in control, bringing it down consecutive multiple days, back down in here. So you see, now we're starting to get some support right here. I don't even have to draw lines on my chart. You can see it, but I will draw the lines, but I just want to show you the path, what I always talk about. Then the buyers stepped right back in, came all the way back up. We got, again, 50% of that bearish candle right there. They couldn't get it a little higher back, transact back in here. Sellers step in and start pushing it back down, all the way down. But now, did the sellers push it all the way back down to here? No, it's got a higher low, and we're building back up this week, like last few weeks. You got a higher high, higher low, higher high, higher low, higher high, higher low, higher high. So are we going to get another higher low, or over the weekend are they going to bring it back down and we're going to trade in here to start next week? Or are they actually going to maybe close it strong on a Friday and squeeze all these sellers, and then maybe gold is rocking next week back out near the all-time highs? So we're at a critical area, right? And then next week we have on Friday NFP, and then in the next couple weeks we've got FOMC, and gold is trading relative near the all-time high. So now let's grab our zones and points of interest. Okay, so our zones, number one, how to recognize these is off of that all-time high when it came down. Look at the body of volume. If I'm just trapping the body of volume, okay? So just look at what I'm doing here. I will even zoom in because sometimes I don't zoom in and then I get a lot of questions. Ron, did you get the wick? Did you get this? Did you get that? Look at what I'm getting so you can see. Right here, here's the box, right? So I'm bringing it down. I'm not even going to that wick. I'm going to the bodies right there. You see that where that blue candle closed right there and where this one opens right here. So it was a transitional open, no gaps in the market. I always talk about that. Maybe I need to do another blog on transitional opens and what they are. And then look at where I placed those. I didn't place it at that wick. I didn't go down to there. I placed it where that bearish body closed off of the all-time high. So you see it came in there, it was very strong on that day and made that all-time high, 3,500 psychological area, and the sellers were there dropping it all the way right back down to the opening price. They came for a low, but that's where it closed. So you see I'm physically trapping the volume. Okay, so that's my zone. Now it's red, right? Because it continued push down. So that the sellers pinned it down, shooting star candle, pushing down. So you don't have to color coordinate your boxes. You can leave it like that if you want. But I color coordinate it because, I don't know, I've been doing that since I was a kid and I'm going to continue doing that. So that's how I teach. This how when someone said, Ron, how did you learn this? I'm telling you guys, this is how I learned how to do this. Okay, no one taught me this. This was all self-taught. So I'm a very visual person. I like colors on my charts. I understand that green means buyers, support, demand. I know that red on my chart means sellers, resistance, supply. Okay, I know that a neutral zone on my chart means consolidation, sideways, trading action, and then that's how I develop, my analysis, right? So see with this zone, now watch what I'm doing, guys. I'm not changing the size of it. I'm not making it bigger. I'm not making it smaller. It's that same exact zone, okay? So are we good on this? Because I know it's a Friday and you guys want to get trading, but I really want you guys to learn this today so you can practice this over the weekend. So next week when we start, we're on the same page and then we can continue to cook together, okay? So bringing this now, get in the habit. Whenever you determine a critical zone, the way how you backtest is by stretching it into the future. Then when the volume revisits this area, then you can decide whether it's closing above, below, fake outs, impulse, this, that. When the volume comes back to transact in this exact zone, we figure it out. Look at here. This bullish candle now physically closed above the red zone right here, right? So someone will say to me, Ron, it closed above. How is it still red? So I got to wait for the next bar. The next bar, look, this is when I was calling out BS and manipulation on this day when it happened. So right there, that little wick coming off of two big bullish candles, how did it not just open ignited right there and just take out that little tiny wick and drive up this all-time high wick? So you can tell that the market, they shut it down. There's Tuesday, midweek Wednesday, they opened it, bearish ignited. There's our blog, bearish ignited. All the momentum of the sellers hitting the bid right off as soon as the day opened. And they didn't even let go off the gas pedal. Like they kept driving it down, driving it down. Maybe it got a wick and came back up. We can't see that because it's a daily candle. But if you go and you dissect this daily candle, you can see when it maybe got a wick, maybe somewhere inside 50% here, it got a wick on an hourly, came back up. Maybe it was ready to flip this bar, but that daily volume, that big ignited head still came in, started offering to all those buyers, continuing to come down. And look at where it closed. Officially it closed below, again, the red zone. So it's still a red zone. I can see it closed above, but I was looking for maybe a wick to come in here, come back up, then flip the candle like a hammer, and then we were driving. Then I would be in a buy, because then I know we closed above, it came, it pulled back, it got a higher low, got some support at a point of control, at a point of interest, and then flipped and drive. So that would take me from a bias to possibly buy. But now when you sit and wait for the volume to close, you can see it was a bearish candle closing below 50%, closing back below that red zone. So in fact, it's still the red zone. Then you can see the next day, this was a big bullish candle that opened, ignited, and came up bullish, right through, again in that red zone. And look at the rejection, lower high, they rejected it, we start to break, and there's the drop, okay? So Do you guys understand now why I keep the zone? Someone said to me the other day, well, Ron, why don't you just make the zone a little bit bigger now and do that? Well, then you're manipulating the charts and you're making the chart do what you want it to do. Like you want it, what you want to see here. Then it doesn't kind of work like that. Then if I do that, then I can bring it back down to there, and then then I can stretch that a bigger zone into the future. If you want, backtest this, try it. And then what are you going to do up there? Again, are you going to just make it again match the bodies and just continue just doing it like that? I don't do it like that. I don't play this like would've, should've, could've game. I play the game what the market presents to me, where the bars open and close. That's what I go with, okay? Because an opening and close is much more powerful than just any type of volume, right? That's why a candle's open and close for specific reasons. That's why sometimes opening days gap down, gap up. That's how market makers open the session, okay? I can't control that, neither can you. So I just, whatever I see, I chart, and then I decide, is this a fake out? Is it a solid move up here? Did the volume actually close above and get a quick retest and drive? No, it didn't. And then when I stretch it into the future, again, you see I'm stretching in the future. I can see bullish days coming in here. What's the result? Again, rejected back down, coming back down. Again, you stretch this in the future. Again, we got another positive daily candle on our Friday close. Then you see over the weekend, it did open. It was bullish, bullish, bullish. It took out the high. They kind of tricked those buyers, right there. But then it came right back down, closed in there, and dropped again. So you see another fake breakout up there. So I'm stretching the same zone, same size, back in the future. Again, I see it closing on a Tuesday strong. They opened it. Again, they baited the buyers to just buy the quick open, thinking it's going to continue to drive to all-time high. And then they trap them and bring it right back down. That's a bearish engulfing candle right back in that red zone. Then look at it. You got like a weekly push down, okay? Same zone, stretching into the future. Look at when we came in here more recently, August. We came in here, we were trading right about 50% of it. It came in, and then they closed it back down. And then you see when it comes back up for like a retest, rejections, and push back down. Now, look at guys. Wow. We are trading in the zone again, in this supply zone. Yesterday, look at it. We got all the way right up to the top of the zone. That's where the highest point was. That nice psychological number, 3,425, and they rejected it back down. Look at where our daily bar is. So if we start to get a wick and we start to flip up, are we going to fill this wick and continue to break out of here? If we do break out, we're going to be testing maybe this wick right here, 3,438. Maybe this one right here at 3,450 psychological area, and then all we have left is the all-time high wick over here. Okay, so you guys understand now? Zone, same size, and then just stretch it into the future. Next week, the week after, all of September, all of October. Okay, let's stretch it all the way until January 1st of 2026. How about we do that? We take care of all of 2025. Okay, for the rest of the year. There we go. There. Thursday, January 1st, 2026. I've stretched it into the future. Okay? Are we all good on this? Okay? I know I took a little bit more time, but now I'm going to start going a little faster. But does that help you guys so we don't get these same redundant questions all the time? Ron, why did you put it this way, that way, this size? Why didn't you include the wick? Why didn't you include that? Hopefully that clears it up, guys. I know every day there's new subscribers and it's difficult, but you guys that are regularly on here and learning, this is for you. I'm not talking for the new subscribers. We appreciate you guys. We love you guys as well. But there's been other traders, other snipers here that have been on the YouTube channel for 3 months, 6 months, 1 year now. So I want to clear the confusion for you guys, okay? Is that good? And then for our new viewers, you guys are lucky. You got a full, complete breakdown now of how those zones work. So you guys are benefiting more than anybody on these calls. So you guys are getting a great education. Okay, so you see, it can't, and then notice, guys, just you do this on your own over the weekend, and then tell Uncle Ronnie next week how your analysis. Look at when they spiked it up. Look at the reversals. Like, this is what I do on the weekends. This is how I study. I look, when did they fake out? What were the days of the week? And then maybe you'll start to see patterns. Not always, but you're ready for a midweek reversal. You're ready for a Friday, Monday move. Like here, look, it's a Tuesday, Wednesday drop. This one too. It's a Friday, Monday drop. This one right here, it's a Tuesday, Wednesday drop. right here, inside here, it was a Friday, Monday drop. Right here, we don't have our close of our Friday yet, so we'll look at that, but it won't be a Monday, it will be a Tuesday. So guys, that helps. You know, when guys were asking me, Ron, I want to review on the weekends, but what do I review? Where do I start? Right there. Just look at these type of things and then start to analyze, see, okay, I'm starting to notice a pattern that a lot of bars on gold on Tuesday and Wednesday, reverse moves. Friday, Mondays. Going into the weekend, opening up a new week. It's not always going to happen, but when we look at the history, it's telling us that that's common for this. So just keep that in mind as a trader. You know, the more you know, the more powerful you are as a trader, right? You don't want to always just be naive to the fact that markets can do a midweek reversal or a weekend reversal. You can't be stubborn to that or have an ego. You got to see, look at the results of the price action. It's telling us that it does that, okay? And we're going into a Friday and a possible Tuesday because Monday's market is closed, okay? Now, when I do the red zone, I got to figure out a green zone, right? It's very simple too. Look at structure, okay? This was a big bar, second bar here that closed above all of this bearish days. And so if you were figuring out 50% of this point of control and you're stretching in the future, you could have grabbed that pullback wick in there. You know, there is some traders that nailed that. I was so proud to see that this week, some traders nailed the Powell pullback and nailed it exactly with a pending order, and they got filled and they made some good money. Why? Because they analyzed it and they stretched it into the future and they had a pending order waiting and it got activated. Beautiful, okay? So now when we came back up, look at here, okay? We've got a bullish flag pattern, okay? Right there. I'll make it neutral again to show you how I start things off, okay? So you can see we have 3 big bullish days. They're all kind of basically almost ignited and continue to move. These are called 3 soldiers, okay? And then if you see 3 black ones coming down consecutive like that with relatively lower, higher wicks, they're called 3 black crows, okay? I didn't make these names up. This is what they're called, okay? You can call them whatever you want. You can call them 3 big blue candles. You can call them whatever you want. I don't care. Okay. But it's the understanding of these things. So it's the big rally. Like they didn't even let, sellers even have an attempt to even push the markets down because it was so bullish. Lots of volume, big breakout. And then this is where it catches its breath. You can start to see on that second day right here, this bearish day, right there. It didn't continue to skyrocket. It had a cool off. So as soon as you see that cool off, you consolidate that, right? And then if you stretched it into the future the next day, just look at the candles. They kind of print for themselves. Like you can see when that bearish one right there opened, continue to go up high, kind of like tweezer equal highs, and then came back down in here. And look at where they closed it right there. Look at the next day, open bullish ignited right at the same zone that from these 2-day candles, you've kind of acknowledged, you've trapped the volume, and then it came right back up and in there. And then now your 4th day, continuing where it caught its breath, bull flag has a high probability to continue breakout. Now you've learned this week what a bullish ignited candle is. That's a bullish ignited. You've learned the firecracker approach this week. Guys, we've learned a lot this week. So there it is with a short wick. You light it. Your wicks behind you are also short wicks as well. We don't have a long, huge wick to fill. It's ignited, it's cooling off, it's coiling up. We got a higher low, bullish ignited open, and then it just drives right through here again. And notice when it does this. Tuesday and then going into a Wednesday, well, then someone's going to say, well, Ron, I thought you told me it's a Tuesday, Wednesday, midweek reversal. Why didn't it go down? Well, it's not always like that, but you got to pay attention. There's also called a midweek continuation. Now, someone's going to say to me, well, Ron, then again, we're just guessing, is it going to continue or is it going to reverse? Well, that's why you got to know your patterns too. A bullish flag pattern has a high probability of continuing to the upside. So, and then when you start to learn how bodies open with bullish ignited, then you start to get a little bit more conviction. Then you start to look at the wicks behind you. They're shorter. So then you could have this pop and then drive, okay? And you got to also think that a lot of sellers were trying to sell here. So sellers are selling and their stops are above here. So it's easy to go and cause a short squeeze on a big, strong move. So Following that, now look at this zone, okay, bullish flag pattern. I told you right there, I've kind of consolidated all of that volume. You notice I'm not going up here to there. I'm just keeping it consistent. Someone will say, well, Ron, why don't you get all the wicks? Okay, that's fine. You can do that too. But just when you go to a lower time frame, from daily to 4 hour to hourly to 30 minute to 15 minute, 5 minute, stay consistent and keep your zones with the wicks. I don't do that. So I keep it with the bodies to get started, and I traditionally stay with the bodies. Explanation, quick explanation, is because that is the trading volume. Wicks represent the range, like it's representing that this candle went down here, but when it went down there, it came right back up and closed right there. So to me, the open and the close of any time frame is more important than the range. The range is important to analyze, but it's the true, real body of volume is the most important, okay? When we're studying what is a body of a candle, it tells you the real volume, the delta volume inside of it, okay? So now I make that zone green to represent bullish flag pattern, to represent buyers, to represent demand, to represent support, whatever you want to call it, okay? And now we stretch it into the future. You see, this candle came down. It didn't come in the green zone. It went back up. This one came down, didn't go in the green zone, went back up. This one came down, didn't go in the green zone, back up. Now, on this day, on May 1st, beginning of the month, notice patterns, how things work. It came down, came down, came down, broke through there, and then it's where it closes, okay? Yes, that was a bearish candle, it broke, but what were the results? The buyers picked it right back up and they reversed it, and look where they closed it, right again above that same green zone. Then you had Friday, this inside spin top candle came back and hold, and then look at how we opened Friday, and then a reversal going into a Monday. And notice it's kind of a bullish ignited candle continuing to drive. And then we got up to our fake out up there. Then it came back down. So if you stretch this again, stretching it, you can see that we closed below it. That's what caused that extreme low at that orange line. Then it came right back up, closed back in the... This is called bar coding. Multiple days, like the volume is trading same direction, just switching, bearish, bullish, bearish, bullish. But then when you'll notice the accumulation, higher low, bullish ignited bottom, higher low, it's ascending, it's building its depth of market. Then you get a body that closes above. So yes, it did initially break this zone, it violated it, it broke it, but the buyers recovered and held it up. So, you know, it was a tough week to trade there. I'm not gonna lie, we traded that. Those are those difficult, even if scalping, if you see 5 minutes, bearish, bullish, you got to know it's accumulating. Both sides are accumulating. Figure out who's accumulating more and go with the flow of the overall trend of the market, okay? And stretching this in the future. You see, we have not traded back in this green zone. I'm stretching it in the future. Keep going. We're now diverging away from it. We're moving away from it. So the depth of market is getting stronger from this green zone, okay? Why is, like, we're up here. Why is he even talking about this? Because that is a critical block in the market. I don't know when gold is going to come back down in here, 3,200. I don't know. Maybe next month, maybe next year, maybe 5 years from now. I don't know when. But when it does come in there, if it ever does, I want to place a signal, an alert in there, because it could be full of pending buyers and break right back out of there, okay? I can't tell you when it's going to come back in here because I have no idea. I'm just showing you since March, April, how we've been moving since then. So you can start to see the overall trend of gold, okay? Now, points of interest. Now we got our zones, perfect. I can continue to look for more zones, but now we got to find some points of interest. So here it was bearish, it came down. Did it come into the green zone? No, right away when you see the wick, you can acknowledge it. I place a line, a yellow line when I'm looking at daily points of interest or lows or highs, you know, so right there it came down, went back up. Notice the dates again, time and sales. That's how auctions work. If you ever go to a live auction, are they busier on Mondays? Are they really busy on a Friday? Are they busy on a Wednesday? I go to a live auction and you'll see. Are you going to see more people on specific days? I do that. I'm a nerd like that. I go to live car auctions. I go on days when I know it's not as busy, and I know which days because I go regularly, and there's days that I want to avoid because it's too crazy. So I know that there's a lot of volume, there's a lot of traders, there's a lot of bidders, and that's how auctions work. So this is a live auction, trading gold, trading crude oil, trading, now it's an auction, okay? So it came down right there, stopped. See, now my mind is thinking it didn't come in the green box. Why? There's got to be a reason for that. How did they not just come into the green box when they were already almost there? Because the buyers stepped in and said, no, you're not coming in this green box. We are protecting it, right? We're strengthening the depth of market, and we're asking to trade here. We're not allowing you to bid in here. Okay, so they pushed it right back up. Then again, notice the date, Thursday, May 29, kind of the end of the month. Then when it came back in here, notice again when it came sellers. This was a big bearish candle coming down, right here, June 30th, end of the month. Notice. Why didn't it break this low? Just a little bit. Just break it and come back into the green box. Because those are what we call equal lows. Tweezer bottom lows, and the buyers are there. And they said, nope, you're not coming in here. We're protecting it. We have more orders here to protect this. So then when you see that's kind of a clue that the market wants to continue to go back up. It did not break for a new lower low. You know, if you break for a new lower low, it changes the algorithm in the entire depth of market. Then more offers, more sellers can start putting more offers in the market. Maybe our buyers down here will see that it breaks. Maybe they had pending orders waiting in this green box. Now they want to remove them. They'll cancel those pending orders and maybe place them lower so they can get a better discount. Then you're breaking this zone. Then the sellers could cut right through here, close it below here. The zone could, then you attract more sellers in there. You scare the buyers out, and then it reverses. Then it's a bear zone, and then now the sellers are in control and selling below here. So that's the importance, guys, about these zones and who controls these zones. It's not just we do this just for fun. No, we do this because we want to know who has control of the zone, because what dictates the move in the markets is whoever's the aggressor. Is the buyer more aggressive? Is the seller more aggressive? When you have these zones, there's just pending orders sitting there waiting, which can be canceled, but once or a big buyer or seller can come in there and activate them all. So our job as traders is to figure out who is the aggressor in the market, right? Who is more aggressive taking out all of these orders? Like right up here, where we're trading in here in this all-time high supply zone. Are the sellers going to be more aggressive and come back down and hit all these orders down here? Or are the buyers going to be more aggressive and start hitting the offers up here and start hitting on the asking price up here? Okay. So you see that point of that yellow line, 3,245, it's holding across the board. Now, again, when we come back down, you see it came down, back up. This one opened, back down, and then look at right there. We're back to that bodies now. So bodies are good points of interest as well, right? So I place a line right there, a body, a body. Sometimes I look backwards. I see then a wick hit off of it. I see a wick hit off of it, a wick, a wick, a wick. So then it's kind of strengthening my zone, my point of interest, that to show that there's been a lot of transactions at this location over here at 3,275, that nice psychological number again. So you see how it came down there and held. Again, now when we revisit, that's what I mean. These lines, these zones are static. Stretch them into the future, because maybe they will revisit. And look at it, this big bearish candle kind of right tapped into that yellow line. Look where it closed, right at the yellow line. Next day again, Thursday, moved up, came back down, held, inverted hammer candle, and then we built our way. We did not break here. Sellers did not close below with any volume below here. The buyers are there protecting it, and it didn't come to this low. So those are technically higher lows. And you see the results coming off of there. Again, look for pivots in the market, real easy on the eyes. When it came up there, right up there, you should have a pivot where they kind of stopped it right up there. You can 3,405. You can go 50% right in the middle if you guys want. That's up to you, okay? But if we strictly go either the wicks or the bodies, you should have some sort of reference that the sellers came in and pushed it right back down, okay? I'll adjust this in just a moment, but I'm just going to keep it at that high wick to show you guys. And then you see, what were the results? Back down, came back up, lower high, back down. But you see, it stopped right there. That's it. A bullish engulfing candle stepped in and stopped the move from going down any further. 3,315 held. What were the results? Now, this is what our results. Since then, August 20th, we're now in a weekly uptrend. We're coming back up. Higher low, higher high. Higher low, higher high. Higher low, higher high. Higher low, higher high yesterday, but right now we have no new higher highs. So the sellers now are in control of today's volume, but overall, the trend is still bullish. So today's a Friday. We're going to see, is this candle going to close back bearish engulfing and engulf all of yesterday's volume? Maybe we're going to push down next week, or are the buyers going to come back up with a wick and start to trade back near the high and break out of here and maybe close positive? Okay, so you guys see, I can look for also other significant points of interest. You know, when you see a big body engulfing candle, try and target 50% of it. Do now our 50% rule, right? Cut it in half. You don't have to guess like me. You can figure out I'll do it on some candles with the Fibonacci, and I'll show you guys how we do this. Okay, so right there it's still holding. I could do right there, it's still holding, but now let's kind of get more into it. Okay, so yesterday we opened, it was initially bearish, it came down, it stopped right there yesterday. That's a higher low from the previous day. Higher low, higher low, higher low. So technically we're pushing back up. The buyers are there protecting it from breaking, and they came right back in. They pushed it to the opening price. They flipped the candle. Look at the previous day, short wick. Then they filled it and then drive. They broke above this previous yellow line high right back here on Friday, August 8th. So they did technically create a new high coming out of there. We haven't created new higher high overall above here and above here, but it is still technically, we did get above this area. So it did create that new high yesterday. We got up to there, and then there was a little bit of a sell-off yesterday. Okay, now let's do, where did we close yesterday? Where did we open today? Was it a transition, clean transition? Yes, it was. It closed, it opened right here. I don't see gold gapping up here on an open. I don't see it gapping down. Clean open. You'll notice more gaps when you're looking at stock securities like Nvidia and those things. Those things have gaps, not so much in Forex or futures trading, okay? But right there, see? And then what were the results? Okay, when it opened, who was in control of this candle? It was buyers. It was bullish. It opened, and you can tell by the wick of the candle. Was it a big wick? It's a relatively short wick. It didn't really fill too much. The buyers were initially there at open for 3,415, 16. Look at, they only brought it up 20 pips to 418. Did it fill the previous day and drive? No, it didn't. Okay, so I can even acknowledge where's yesterday's high with a yellow line. So if we were to flip today's candle and it comes all the way up, we get right back to the opening price, it could turn into a hammer and just break there and then just fill yesterday's wick real easy. Like, as a scalper, just measure that move, and then you know exactly what you're getting when it just breaks on a day. Look, that's a 50 pip move. That's a daily goal for some scalpers. So, you know, they might be waiting for this to come up with a higher low, fill, and then just flip. They could be in a buy, also watching when volume closes above and retests this purple line, just to fill that little tiny wick. Grab your 50 pips. But traders are looking more for that. So if it breaks above that yellow line, where's it going? How high? Let's not guess where it's going to go. Let's be accurate. Okay, maybe it wants to test, fill back to these bodies, to those points of interest. Just draw a line right there. So then you got a nice solid number, 3,431. Again, now this is trading the tape. So if it fills up to there, what's the next tape? Where's the next fill? Measure it so you know, yellow to yellow, it's another 80 pip fill. Okay, so you can now combine this one, 50 plus 80, that's 130 pips, $13 move on gold. And then you can, when it gets up there, you have to acknowledge that it could be resistance, and they could just come in there, it could be a double top, and they push it right back down. So you got to know these things. And then also what you got to do is you got to watch for volume close above, because it might make this yellow line into its resistance right now. It might turn into support and continue going up. Okay, now sellers are in control of today's candle so far. There's still 9.5 hours to go. Anything can happen in those 9.5 hours. But technically speaking, right now, I can see it opened. The buyers were there, but the sellers rejected them back down quickly, and the sellers are in full control. Look at the volume. This is all selling volume, selling volume, selling volume, selling volume. And are we at the low? Yeah, we are. Look at the wick. Okay, I'm going to place a purple line. I know it's early placing a purple line here. Are we going to break this and go even lower? Possibly. Okay, but right now, when we're doing our technical analysis, that is the lowest point so far. Okay, and it could continue to break today and go even further. Bearish, 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 bearish. What about right here? The close of Wednesday and the open of yesterday. why don't we acknowledge this area with a yellow point of interest right there? And then someone will say to me, well, Ron, why didn't you place it at that wick right there? That's fine. If you do that, that's wick analysis, okay? I like to do more points of interest of where, again, bodies close, bodies open. Wicks are important too. So you notice how I acknowledged the wick up here. I did the bodies, right? I did that wick right there. I got it. And then I got the bodies. And then my next one would be that wick right there too. So I do analyze wicks, but I place more heavy emphasis on the open and close of candles, okay? So are we going to come all the way down there? And if we do, might get a wick and go back up. Or is this big bearish candle going to come all the way down there and close below there? Then you see that they've engulfed all of that volume, and then it could open next week and start to be bearish and come down here, okay? Or it could barcode, like it could be blue and then come down black, and then next week we go up blue again and come back down black, and then we're in an accumulation phase again between the buyers and the sellers, okay? So right now it's very bearish, okay? So I'm gonna now, they call me the surgeon, I'm gonna dissect this daily candle into whatever time frame you want to go. I go 4H, 1H, 2H, you can go wherever you want. We can still see that the 4-hour candles are still in an uptrend, okay? Right there, you see when they kind of topped out up there, and then it was trending down, and then we found the bottom right there, and then when it came back, higher low, broke through here, higher high, pulled back, 50% right there, higher low, higher high, higher low, higher high, higher low, higher high, okay? So they pinned it at what time? There's your pinned shooting star candle. It came up, this was Thursday at, what time do we got there? And in midday, okay, 2 to 4, 6 to the close, and then the new daily candle opening right here at 6 p.m. today, okay, or on Thursday. So you can see they pinned it right up there, and then the 4-hour candles now are coming down lower low, going back up lower high, coming back down with a lower low. Look at our 4-hour candle now, right at that lowest point. 2 hours and 50 minutes still left on this one that closes, but now we've got a pattern. You have a visual top already pinned. You can go all the way to the top. I go to the bodies of volume right there and bringing it down. So you see we have a leg coming down. Now, are we going to find some support somewhere to come back up? That's what we got to figure out. Is it going to have a leg where it comes back up? If it does, come back up. You're coming back up here. It could be a double top. And then there's your M pattern, wherever we figure out where the neckline is, okay? But it could just be, again, small pullbacks to the upside. Because right now it's coming down pretty heavy. So even if there is, you look for a buy, it could just come back up to here, and then they reject it back down with lower high and continue lower lows, and then you're saying, well, Ron, I'm trying to buy. You told me it looks bullish. Yeah, but you still got to look at what the trend is and what leg you're trading, okay? So this is a bearish leg coming down. Overall, it's bullish. So maybe we got to figure out where it will stop, find some support, and maybe look for that next leg up. Or it could just continue pushing down, okay? So one thing I would notice right here, do you guys see a little bit? You guys call it fair value gap. Right here, like you see right there, that wick where we have the purple line and that wick. You see that chunk of blue volume in this 4-hour candle, Thursday 6 a.m. to 10 a.m. That was like our session exactly yesterday, right there. See right there where I'm placing that green zone from that wick to that wick. You see how this 4-hour candle of gold has not been transacted. Look, maybe right now it's going to start to transact in here. Okay, so if we physically lose this body of volume, like for example, if the 4-hour candle maybe cuts through here and closes below here, I'm going to invert that zone to offers. Maybe it will come back up in a red zone, and then sellers are still there pushing it down, okay? But what happens if we come inside here in that zone that has not been transacted? It's showing us that it's buyers, right? It looks like a bullish fair value gap, bullish point of control. And what if we come in here and then we reverse out of here, and then it comes back up, maybe it does something like this, okay? Then that's where maybe we can spot our bullish reversal today in transacting in this green box, okay? So I'm going to keep this green box on my chart. I know it's confusing because Ron has a big red and a green, okay? The red is representing the all-time high supply, but we see from this uptrend that there's still some buyers there that could hold up the market. So right there, we're going to possibly come into it in the next little bit. Let's stretch it into the future, okay? And just remember that this was a 4-hour fair value gap on You can see the date of the candle as well. On Thursday, August 28, yesterday, from 6 to 10 a.m., exactly when we were trading yesterday, okay? So now you see it's reversing all the way back into this balance here that has not been transacted, okay? So are we going to, and then when you're looking at your patterns, look at what you see. You see it came up there, there's one top coming back down. Is this going to be our neckline? And then to maybe possibly pull back up today. But even when we're pulling back up, I'm not saying it's just going to go right through there, okay? You still got to respect these sellers behind us. You have to respect them. Those buyers came up, and look what they did. They pushed them back down. Those buyers came all the way up, and then the sellers really slammed it back down. So even if we get a little bounce in here, you know, like it could come up halfway right here and could continue to come and test this. If we get a double bottom at that green zone, now we're talking different context. A double bottom, the second bottom has traditionally more volume and stronger to break out. Now it's different. Now we're talking double bottom. But however, if it comes back down that lower high and comes back down here and we don't see a double bottom and the sellers break it down there, that's it. We lost that zone. It could be a red zone and then sellers are still in full control, okay? So guys, get to know this pattern. Okay, you're going to see this pattern on dailies, on 4 hours, on hourlies, on 15 minutes, on 5 minutes, even on 1 minute. Okay, just acknowledge that we do have this true uptrend coming up. You have to acknowledge that the sellers are momentarily in control today, right? But that doesn't mean that the market is crashing, gold is crashing. Let's see what's going to happen when they transact in this zone today, because you can see there's been no transactions made in here from, look at the number, 3,404, I would say, or 5, all the way down to 3,400. It's a 50 pip zone, a $5 zone, okay? But there could be some big orders waiting to get filled in there, okay? So I don't want to sit on the 4 hours all day. Let's go into the 1 hour. Now you can see the 1 hours right here. Barcoding, 7 a.m. yesterday, came back down 8 a.m. Remember, we had the sell on gold at 8 a.m. Then it came back up, closed strong on Wall Street, and then it continued going back up. Look at the retest now, right at that zone. Continue to move up. Now I can see, okay, it was 3 p.m. when we hit the high, 4 when the markets closed, Thursday, August at 4 p.m. Then we started to trend down. Now I can see the futures market pushing down. Now I can start to see midnight, okay, 1 a.m. There's 2 a.m. There's London. So I can see again, 4 a.m. was strong, but they pinned it down lower high, continued to push it down. So you see, even on the hourly, we're making lower lows, lower highs, lower low, a lower high, a new lower low. But now look at these hourly candles. We're coming into that 4-hour green zone. Are they holding? Right now that hourly candle came in. We got thin volume. Maybe if we get an hourly volume close above our yellow line and we hold this, that could be looking for a buy, right? If it comes in here, let's say, and holds here, maybe we'll come back up, maybe build in this area. What if we get a closure above there? Then we could be moving back up. Are we going to move all the way back up here? I don't know about that. It's hard to say. We have structure over here on the 1 hours. Now, when I'm dissecting 1 hour candles, do I see a little resistance? Do I see some support? Do I see anything on the 1 hours? What about right here? What about where that hourly candle closed? That one opened right there, just those two, okay? And then we got volume above it. Now, I'm not going to use a yellow line. Yellow represents daily. For hourly or for H, I use a white line, okay? So you see, so I'm doing this, I'm basing this analysis because now I'm on the 1H candles. So I can see now when the bearish volume closed below that white line, when it came up, it looked like it was resistance, a fake out. Looked like it was a resistance fake out. Again, look at when it comes up relative to that white line, push back down. Here it closed right at that white line. We had that ignited open at 4 a.m. Gold did push, but then look at the results. Lower high, and then the seller slammed it right back down and closed it below there. Almost a bearish engulfing body as well. Then we continued with that rejection, 5 a.m., 6 a.m. So you see now how the hourly candle is building with some blue volume at our 4 hour zone. So will it need to come in deeper in here? What I do is I want to know exactly where 50% of that zone is. Right there, white line, okay? Now, I don't want to guess. So if I don't want to guess, I want to know exactly where 50% of that zone is. I get my Fibonacci tool, and notice how I'm not changing the size of that green zone. I'm not manipulating it. I got that exact green zone from the 4 hour imbalance that has not been transacted. See how accurate I was guessing where my white line is? Guys, you guys are going to become pros at this, okay? So if it comes down in there, you know, I expect some good buyers to be right there to bring it back up. However, we might not even come in there. We just tapped right into it, and look, it already activated some pending buys, and look how we're coming up strong right now. So this hourly candle is not closing for another 40 minutes. So if you want to watch hourly candles, you got to watch and wait 40 minutes, see how it's continuing to build. Are you going to get any volume closing above this daily point of interest? Is this our first hourly bottom? Will it come up? Will it create a double bottom? Things like that, guys. Context, okay? So that's hourly, okay? Still, it's obviously on an uptrend, but we have to acknowledge that sellers are in control. Even when we're buying right now, we're buying against this trend. So we're counter trading unless the buyers can physically maybe close it like kind of above here, retest this, and then they can regain control, and then they're back in their uptrend, right? Then we continue trading to the upside. But who knows? This thing might get broken today, might get transacted. We still have COMEX, and we got some red folder news at 8:30, okay? So now I go to the 5 minutes, and if I want to trade 5 minutes, I can trade from tape to tape. Right there, look at two tops, okay? Now this is where you see it come up to that high, back down, like here's the neckline, came back up, they pinned it right there, futures market, closed below. There's your M pattern. I could have sold, placed my stop loss above there, and got some money going down. Right to that white line, that's when I can go to a break even. I can start to scale out, you do your thing. But this is called tape to tape trading now. So I can see now the 5 minute candles came right back up to that hourly white line. They pushed it down, came back up there again, two tops, really broke it down. See how it's struggling to break at this daily point of interest? Coming right back up. They did be strong right there. That was that 4 o'clock. I told you 4 a.m., but then it kind of came back down, closed below, and flushed it back down, coming all the way. Now look at how the 5 minute candles are building, okay? So technically, we have this 5 minute trend line. Like, it's very steep, like however you want to look at it. You can do it like this. I'm going to do it more accurately, like starting it from up here. I almost got that wick right there. I got that where it came in there. I got that wick. I got that ignited body push down. So you see, we just technically broke the trend line right now, okay? But we're at that daily point of interest yellow line. So let's see if we can get some 5 minute volume building above here, okay? And do we have a strong 5 minute candle that just stronger than all these shitty candles? Yes, you can clearly see how strong that candle is. Can you verify now where's 50% of this? Okay, when I'm guessing where's half is right there. I don't want to guess. Let's do our Fibonacci. Let's find out the point of control of this big bullish candle, because it's a significant one. It's the first one that kind of closed above this trend line. So 50%, I was bang on. Beautiful. Now let me just draw my bullish point of control zone on this candle bar right there. Same shit that I do on the daily 4 hour, 5 minute, 1 minute. Okay, stretch it into the future and then go backwards. Okay, you can see it was red there, it was red there, it was red there. They pushed it down. Now we closed above. So we've inverted the zone, whatever you guys call it, inversions. I don't know what. I don't even know the names today. What people name all this shit. But just going back here, showing you it was a green zone. It came back up. It came in here, it went back up. But you see how strong the selling trend is and continued to push down. Okay, but now you see that first candle right there, it tapped into our 4 hour point of control. Okay, it didn't come deep down in here. Sometimes that's all it requires, is just to tap in here. And now you see it's pulling back into here. So and you see where it's being held at the daily point of interest, right? So we can watch this. What time is it? 7:22. Still lots of time, guys. Now, let's add our daily bar indicator so we know what the overall trend is, okay? So today is bearish, I told you guys. Like, it opened right there, it made the high, and it's bearish, 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 bearish. That candle right there is the lowest point of the day right now, okay? So that's our lowest point of the day right there. Are we going to build out of this, or is it going to be a fake out, okay? Or is it going to continue going down and back deeper down into this 4 hour green zone? Remember, it's a good buy there, but it's better to buy here or better to buy down in there, okay? Does this make sense, guys? And then you see the big red zone because we're trading in that all-time high supply, but we're going to see if the buyers can protect this and start to move back up. Does it make sense, guys? Sorry, that took a long time. Okay, that took a long time. I apologize, but that was pretty thorough. Okay, so I hope everyone is following is what I'm trying to do here, because when I go NASDAQ and US30, I can do those top downs in a couple minutes for us. But if you follow what I'm doing and you know why I'm placing these zones, boxes, lines, it'll make it so much easier for you, okay? So look at the 5 minutes, okay? It opened, it couldn't break above our daily point of interest, the line. Now we got a big bearish candle coming down, right? It cut right through that point of control of that bullish candle, and now you got a bearish igniting candle that's closing in 43 seconds. So are they going to close it back down here and continue trending down? Sellers are still in control, okay? I know maybe you could be looking for a buy there, but on the retest when it came in, maybe it should have got a wick and then kind of came out, maybe close above there. Then that would have been a nice proper buy, okay? But let's wait for this candle bar to close, because it could come deep down in here, still at this point of interest, and come all the way back up and close above here and then start to get out of here, okay? The close of the body will dictate everything. It will dictate the color of this zone as soon as it closes. If it closes below here, I'm going to invert that green zone red real quick. Okay, here's the close. Okay, so it closed. Let you tell me. Okay, you guys tell me. I'm gonna zoom right in. Did this bearish candle close above or below our green zone? You tell me. And this is not a trick question. This isn't. I'm not trying to trick you guys. I just want you guys to see. Did it close above or below that green zone? Please, guys, tell me. Hurry up. Below. Okay, so it closed below. So that zone, you know, if we're following the rules, we have to make it red, right? Because it's trending down. Those sellers came all the way down and closed it below there, okay? So now this candle now opened. You see it opened, small pullback, and the buyers are bringing it right back up. So they brought it all the way right up there. That technically is a lower high. It didn't reach the opening position of the previous bar. And look at how the sellers now rejected it all the way. Look at it, right? We're right all the way back in here. Lots of time left on this candle. 4 minutes, okay? But you see how it came. The buyers were strong, and those sellers are still there. And now we're transacting back in this red zone. So will they offer like more offers for all of these buyers coming in and continue closing below? Then you could consider we still have more room to fall. The sellers could still be there to push this down, okay? So let's, again, watch and see. If this bullish volume closes above here, I'm going to ask you guys, did it close above? And then we're going to flip the zone a different color. And then we're barcoding now. You see it's bullish, it's bearish. It's bullish, but the closure will determine control, okay? Good, guys. No, excellent. You guys all said below. You guys are perfectly correct, okay? But you see how I changed it? Just that little tiny bit. I'm very technical, okay? Someone will say, well, Ron, why don't you just leave it green? It closed right there in the next candle. But then that defeats the purpose of doing this. Then if you're just going to change it up, then you're just going to manipulate it yourself to whatever you want it your bias to believe. I don't trade on like what I kind of think what it wants to do, okay? I trade more with technical mindset, okay? If it proves to me that if the buyers were going to prove to me that they were to make this green zone, to make this red zone, they would have closed it up there. Then they would have proved to me but those sellers proved to me that they closed right below there. And I'm not guessing the size of the zone. That's another thing. Some of you guys always just guess the size of the zone, and that shows inaccuracies. I don't. Remember the way how I figured out that exact zone? I pulled out my Fibonacci tool. This is now we're talking raw mathematics. This is not now we're guessing. So I placed it from the open to the close. So you see where my zone is. It is kind of exactly that 382618 zone in here, okay? So that's why I stick with the Fibonacci levels, and then I'll just change it based on the volume, okay? Now, those buyers are proving to be strong right now. They're showing us their strength. But the bar is going to close in 1 minute and 40 seconds. So can they technically, again, close it above the red zone? I'll flip it. Now we're barcoding. Bullish, bearish, bullish. Notice how it's a higher low, a higher low, a higher low off of the lowest point of the day. and they're bringing it right back up. Okay, we still got volume up breaking that trend line, but let's see what will happen at the daily yellow line position. Do they have enough strength to close it above this daily position? In 1 more minute to go. Okay, awesome, guys. We have almost 360 viewers, guys. If you can hit the like button, because now the markets are going to start to get, intense. We're going to move into COMEX. We're going to do US30. We're going to do NASDAQ. We're going to move into Wall Street, guys. So I do appreciate, guys, if you guys can hit the like button. If you learned a little something on that analysis right there, hit the like. Subscribe to the channel if you guys haven't already. We want to try and get this up to 420 today. That would be a milestone number here for us at SST. Let's target that 420 number. Okay, so we got a nice big bullish engulfing candle. It's engulfing, it's strong, it's breaking through that daily yellow line. Okay, so let's see now where and how it will close. If we assume it's going to close like this, that zone, we're just going to flip blue or green. So I'm going to do it ahead of time. I'm going to assume that this strong candle is going to close in the next 15 seconds above there. So you see how I converted that zone? Now the buyers are proving to me, okay, they're strong. Okay, now where's the volume closing? Is it closing right at the high? Is there going to be a wick? No wick? Is this going to be an ignited open and drive? No, they open it bearish ignited. You can see right quickly. So they're trying to hold it down. So how long can they hold this thing down for before it turns blue and just drives? Okay, see, it's black. They're right there. Like it could just pop and start driving, or you got to kind of tell yourself, I want to wait for a pullback at this yellow line, or I got to wait for a pullback at this green box. Okay, if you do take this early trade, then if it just comes down, it could be coming down to get support. So even if you just buy right now, you got to consider maybe at least placing your stop loss below this zone, right? And then someone's going to say to me, oh shit, Ron, that's a big stop loss. If I was just to buy right there and my stop is below there, yeah, you got a 20 pip stop loss. It's normal in trading. There's other traders that have their stop loss below that purple line. They're at 30 pip stop loss. But maybe some of us haven't even taken the trade yet. So we're watching. Now still, you see, now, did they take out that high? Remember, it opened bullish, ignited, and right there had its chance to take out that wick. It didn't. So it's coming down. It's coming down. Right there, it stopped. Now it might flip. That's a higher low. It still has not retested our yellow point of interest or even came down into here. So you can see that the buyers are asking to continue to trade near the high, but that volume is still maybe going to push back down. These are those hardest candles to trade, because it's right there. It's right there. You're itching to take that buy. And sometimes if you just hold off, the bar might come down lower and lower, and then you'll get a better discount buy. But sometimes you might miss that. You're waiting. How many times on these calls have I waited for it to come down and retest, and then it just takes off? Okay, that's where you got to use, I told you, a little intuition when you're trading. Not everything is 100% as it seems. Can I find the bullish point of control of that big bullish candle? We can. No problem. Grab your Fibonacci tool and figure it out, okay? So we came down, 3 more minutes to go, hasn't broke. Now it's like a hammer candle forming that could technically break out of here. I'm going to buy this, okay? So I'm going to look to see if it can fill this big wick to the left. I'm going to buy. Okay, I'm going to place a red line up there so we can all see. Those were basically, we've got a lot of points of interest right here. I'm going to see if we can kind of maybe just fill up to right to that red line, because I'm counter trading. I'm going against the trend, but maybe it's going to come up and then go back down. But I tried to wait for a deeper pullback, and it wasn't there. I noticed they had a short wick and it was filling. Okay, I know not everyone just trades for 5 pips, right? But if it comes up to the red line, we're looking about 15 pips up there maybe. Yes, it could just go up a little bit and come all the way tumbling back down. Now my stop loss, okay? So I'm going to place my stop loss below that green zone. I know I'm not getting a good risk to reward on my money right now, but it's zero drawdown going straight into profit. Sometimes when I'm scalping for 10, 15 pips, I'm in and out without even realizing any drawdown. That's scalping 1 minute candles. Like if we flip to the 1 minute candle, look at what I bought. I bought that ignited 1 minute bar. So if I'm looking at 50% now, how it's coming back down, where's 50% of that 1 minute bar right there? So you can see how I do the same shit I do on daily for hour,
5 minutes, 1 minute. That was a big ignited bar closing right near the high. This bar didn't open. The next 1 minute candle should have opened bullish and just took out that wick and drove to my red line, but it's got to pull back. It's pulling back into the point of control of that previous, boom, we got our wick. Now this could be a flip and drive. And then I grab my 15 pips, close out the trade, or go to a break even, or start to scale out. Look at now how the 1 minute candles are working. You see how it worked right into 50% of that, and we got our wick, so we should traditionally just start to drive right there. But we're going against the trend, right? So there's going to be a lot of sellers protecting this area, because when the 1 minute candles are trading in here, they go back down. That 1 minute candle traded right there, and then they went back down. We came up here again, we went back down. Now we're starting to close with a little bit of tiny volume building above here. So we got to see now, maybe can we cool off? Can we consolidate? You know, when I tell you guys, it takes like 2 bars to notice a consolidated period. If I trap that, those 2 bars right there, trapping it now, okay, is this going to develop my bullish flag pattern? A bull flag pattern is cooling off, continuing to, has a high probability of continuing to break out of here, okay? Did I catch a little nice move here, or are they going to reverse it all the way right back down into here? Let's just see. We got a nice 1 minute candle. This 1 minute candle is closing in 25 seconds. So that's why I love trading 1 minute candles. They're fascinating because they open and close so fast. So all we got to do is get some volume above these wicks, create a new high, right? We got to create a new high to continue to make higher highs. But while we're waiting, sellers are still offering and can push us down. But let's watch where the close will be. It's going to be interesting. Can we close it above here? Can we close near the high and get another ignited bar breaking out of here? No. So we're still in this zone. And notice how the candle opens. Ignited, bearish. So we're coming down. Does this candle have 50%? Yes, it does. Did we just retest 50% of it? Right there, you know, your cut line? We did. It did pierce out of there. It did create its higher high, okay? And as soon as we did, then it got rejected back down. So now it's coming down. Now we're barcoding. Bullish, bearish, bullish, bearish. Sellers are bringing it all the way right back down now. So if they close it below here, you know, they got control now. So that move was just for a few pips, right? But this one's going to close in 25 seconds. If I go back to the 5 minute, my 5 minute just closed. And this is a new 5 minute candle that just opened, that spiked, right? It created the new higher high. We got to create higher highs in order to move higher. So that was the start of it. As soon as that 5 minute candle opened, you saw it on that 1 minute, and then it got rejected. It came all the way deeper down in here. That is still technically a higher low. Can we continue to push it right back in that consolidated zone, build in there, continue to flag out of here? If these sellers close it below here, then we got a lag coming down. Then we got to figure out, maybe we're going to come back down to test our yellow line here for support, or we got to figure out where that big bullish candle right here, where its point of control is. This one right here, this previous one at 725. So if I'm looking at 50%, sorry guys, I just got to zoom in here. It's right there, okay? So I know my stop loss is still above these zones. So if it dips down into here, you know, right here, maybe we'll find support there and then get our move that we're looking for, okay? So like how far did that move? 10 pips. That was 10 pips with zero drawdown. I know a lot of us are not just looking for 10 pips, but I'm trying to tell you, scalpers, sometimes it's all we're looking for. 10, 15 pips in and out. See the 1 minute candles now? You know that zone? Okay, so that same zone, that bearish spin top candle closed below it. So that's technically now that red zone now. Okay, let me just get rid of all these red lines, those cut lines. They're probably irrelevant right now. Okay, but you see what I do? That bar came down, created a lower low, came there, closed below. That's why I made that zone red now. So now my buyers got to show me that they can continue to transact up here and close it above here. If it, yeah, you see how it's a red zone? They came in, lower high, lower high. Now the sellers have control, pushing it down. So I just now am at a break even now. That's where, remember, I entered on that 5 minute candle. So I just pissed away a little bit of profit, but that's not what I'm looking for. I'm not looking just to scalp just for 10 pips. I'm trying to look for a longer move, but I'm trying to show you guys how trading works, right? So you see now we found our resistance. That was a counter buy coming back up. So can we build now? Because we still have a 1 minute uptrend. This was a higher high. That was a higher low. That was a higher high. Now we could be pulling back somewhere. I'm thinking more the yellow line or this green zone to create a higher low momentum. Okay, maybe right here, if they can hold this position and get it back above there, maybe we don't need to transact all the way down into here. Okay, so this is me following it on the 1 minutes. If we're following it on the 5s, this is what we got going on. Okay, we're still right here. Our 5-minute candle has not even transacted at the yellow line. We haven't came into the bullish fair value zone of this body of this candle. And this one down here, we kind of already worked out of that area. Okay, so this one I'm concentrating on. I'm also watching that higher low wick. Is this going to be a 5-minute bearish engulfing candle closing in the next 1 minute? Or are the buyers going to step in? Let's watch the 1 minutes, okay? Okay, so it did close with a tiny bit of blue volume. It's a spin top, okay? Came down, back up, lower high, closed with a little bit of blue volume. So now it's transitioning into the next bar coming up blue. But now you see that red zone is still above us there. So even if it's a nice, big, nice, beautiful bullish candle, it could come right in there again and sellers could push it right back down. If we can close inside here, maybe we can build back. But I don't see a 1 minute candle officially closing above here yet. So this is all resistance still above us, okay? So can we continue to build? See this 5-minute candle that's now closing in 18 seconds? So we're gonna watch the close of this. It's got a wick so far. The wick is a higher low from there, higher low. So where is it closing? If it still closes below this zone, we're still below that red zone. Okay, look at it, quick push. Look at how it's pushing right back up. Those 1 minute candles are pushing right back into our red zone. Look at, again, they open it, ignited, bringing it down. But you see that nice, look at it. We had that beautiful bullish 1 minute bar. Where did it close? Right at 50% of the zone, right at the highest point. So it did just open, and you see they're bringing it down right there, 50%. Can we hold right around here? Because we're trading that point of control of this candle. Okay, right here where my cursor is, we came a little bit deeper. Can we pick up higher low and continue work our way up? If we just get to the highest point again, we have no wick behind us on that 1 minute candle. We could therefore continue to break out and fill our previous wick and then get right back in the money. But now we might have more volume with us. Oh shit, I didn't want to move that. Maybe we got more volume with us now because it dipped down, picked up more buyers, and now maybe with those new buyers, we can redistribute that volume to the upside. Here's the close of the candle in 5 seconds. It looks like it's a hanging man candle. Oh, I can't move. Guys, I have too much like shit on my charts here. I can't move that. Fuck. Okay, so it came down. Again, look at where it closed. The 1 minute bar closed below the red zone. They're opening it, ignited again. That's telling me that the sellers are still strong. But when it come down higher, low, we're building. We're building back up. We got the volume back inside here. So this to me looks like a left shoulder. There's our inverted head. If we can come back in the right shoulder, we've created an inverted head and shoulder pattern. Has a high probability of continuing to break out to the upside. But we got to get closing volume above here. Okay, and then if you want to watch it on the 5 minutes, go back to your 5, and you got a nice, strong, bullish pin bar candle forming on the 5. So higher, low, still holding, but we're right back in that trap zone volume right there. Okay, so again, it came beautiful, bullish candle right up there again, and a lower high, and they're slamming it back down now. Okay, so, you know, unfortunately, it looks like a double top maybe. It came up. There's the neckline to break for sellers. It came back up. That could be like a double top M, you see, M coming down. So there's our neckline. If the sellers on the 1 minute close it below there, it could do this. And then we come into that zone that has not been transacted. And that could be where the big buyers are pending, okay? So, you know, it's... Welcome to the world of scalping and trading and scalping gold on 1 minutes too. Going into leading into 8 a.m. in COMEX is wild, but you know, we got to continue to watch what's going on here. Oh, I didn't even add my EMAs. Sorry. Yeah, there's the 9 EMA. Okay, we were holding it, but you know, we got volume right below it until the body's closed. 200 EMA. We're right at the 200 too. So we got the 9 and the 200. This is traditionally where the 9 will cross over the 200. You got a bullish crossover, and with that bullish crossover, we could break through this red block and drive. But you see how it's still solid selling pressure right there. Okay, we're having a difficult time. Those sellers brought it right back down, and it is a lower low from up here. lower low, came back up, lower high. They haven't technically broke for a new lower low as of yet, but now we got volume below the 9, below the 200, and we're still below that red zone. So we got to start to see our 5-minute candle again start to build. It's a big bearish candle coming down. I'd like to see, we still haven't retested this yellow line or this block yet, okay? I know it will suck because I'll go and draw down there, but that's maybe where we got to come in. That's why my stop loss is below that area, okay? And I'm not over leveraging my account. I'm not risking everything on this trade, right? You don't want to do that. You want to go in that trade, learn. While you're also learning, you don't got to go crazy sizing. So you can actually learn what's going on. Instead of just panicking and looking at your profit loss report, and see you're in some profit, see you're in some drawdown, this and that, because your emotions will take over your trading. Just continue to stay focused. Do we have a bullish bar closing? No, the sellers are still in control. Lower high, lower high, lower high, but we're building again. Maybe we're building a second bottom now. Remember what I said? A second bottom is stronger than a single bottom. See, that looks like a double bottom, but here's our resistance. We got to break above there, close it above, then maybe we can flip this zone, red to green, and then that 5-minute, 15-minute volume will start to come in and start to redistribute to the upside. Possibly, or I could be entirely wrong, and it could come right back down on me, okay? That's why it's a red zone for a reason, right? I know that we're trading into sellers, but that's why I want to physically see if we can close above there and squeeze the sellers out of the market, because a lot of buyers too are buying, not just me, and stop losses are all placed down here. The sellers know that too. Maybe they want to come down here, but they can activate everything, but there's a big block there waiting. So we got a beautiful 1-minute strong bar. Is it going to close above? Here's the close. It's still closing right in that red zone. So it's still red. Now, if we pull back 50% of that point of control, we're above our 9 and our 200. This is where it could come down. Then we pick up our 9 EMA 200 if you guys use those. I'm looking more at 50% of the body of the candle, more opposed to indicators. And I want to see a quick wick. I want to see a flip, and I want to see a drive to fill that wick and get up to my red line. That was my target in this entire trade. If it can get up there. I haven't measured for 15 pips, but if I start to get it up there and breaking, I could be now still staying in this trade, and now it's moving up 20 pips, or but you still see this red zone is still holding, okay? So it opened, ignited, bearish, coming down for retest. Point of control, 9 EMA, 200, boom, beautiful wick. Where did it wick off of? Your 9 and your 200 right there, and just right at your point of control. So you see how it just came down in there and just spiked that wick? So it transacted with all of those orders there, and it looks to me like they were buy orders, right? That wick shows it, but we didn't close it out with conviction. So next bar, opens, ignited, bearish, coming back down. Can we pick up again, make a higher low, and build off of this? Or are these sellers going to say, we're coming down strong? Then I know it's still a lot of selling pressure above us, okay? And then if you're watching the 5-minute, look at the 5-minute candles. Like as a 5-minute trader, you know, these are ugly too. It came down, it went back up. Look at where the volume closed in that zone. This one came all the way back down too. Look at where it closed. Bullish pin bar in that zone. Now we just opened on this candle. This is a new 15-minute candle, mind you too. It's 7:45, and it opened bearish, coming down, higher low, higher low, higher low. Could flip, and then we start to redistribute to the upside. I'm watching it on the 1 minutes because I want to see a 1-minute candle close above here. Holy shit, like, can we not get it? 10 more seconds to go into the close. We're still holding. There's your double bottom. Come on, just get some volume. I want to show you guys when volume closes above there, what could happen. Otherwise, we got to continue to sweat it out in here. Okay, so we didn't close above there. We're still in this red zone. Holy. Can I get a like for just going through this with you guys? Okay, we got a bullish ignited open. Can we break and fill? Because remember, we got to fill and make new higher highs. When we make new higher highs, these orders down here that are pending might get canceled and start to pend in this zone, right? The depth of market might be coming up, right? So there it is, nice bullish ignited bar. But I don't get excited until I make a new higher high, because I know what tweezer top highs are and I know what a lower high is. So let me just mark to show you guys. We just got to break above that wick right there. Okay, we got our break. That's great. But here's the close in 10 seconds. Can we officially close above there? Watch, we might close near the high, and this red line might turn to support right off the next 1 minute candle, unless we get a bullish ignited open and we're driving. There it is. There's the close right at that target. That's a target, guys. And then they opened it bearish ignited. Watch, if we pull back, that red line could be support. 50%. Look how it's representing 50% of that body, that volume. This green zone, sorry guys, I'm talking fast, but shit, we're trading I'm scalping 1 minute candles. I didn't even know we were going to do this today. But there we go. There's our hammer. Now we're breaking out 20 pips maybe. You can start to go to break even. We didn't realize any drawdown. Okay. Okay, so you can reduce all risk now. You can follow your 5 minute bar, right? What about the 5 minute? There's our 200 EMA on the 5 minute. There's 50% right there. So let me just bring this cut line right there. 50% of the candle lines up exactly with that 200 EMA. If it can get up there, there's 20 pip grab. Can we just fill some imbalance now? Okay, and will this be our first 5 minute bar? Look, we broke above that wick. We broke above there. Will this be our first 5 minute bar closing with volume above this resistance? Did we just kind of buy a, start of a uptrend right now? 50 seconds to go. Wow, let's watch this 5 minute candle close. Guys, I'm going to go to a break even now, up 20 pips. Okay, no risk. I'm going to a break even. 20 pip break even. Let's all go to a break even if we can. And if you want to grab some money, you're welcome to. Learn partials, learn trailing stop losses, all this shit. But I'm watching, more importantly, where's this bar going to close? Oh my God. Okay, if we can close it above this point of control right here, close near the high, we could go ignited one more bar. But expect pullbacks because we're trading against the trend, guys, okay? Okay, good move. Oh shit, 25 pips. Let's go. Not bad, eh? Not bad. Uncle Ronnie still got it. Okay. Here's the close. Near the high. Ignited bullish bar. If it holds. No, it didn't. So they brought it down. Retest time. We're retesting right here. That point of interest, 50% right there. That red line held. 200 EMA is there to help us out. Can it hold, and then can we just come right back up bullish and one more crank out of here, one more move, and then we got 30 to 40 pip squeeze. However, it could come all the way tumbling back down to retest right there, the red line. Okay, and that's again 50% of that bullish bar. Okay, so guys, it's about 20, 25 pips in there. It could come all the way back down. That zone, stretch these zones into the future. All of these. These could be revisited and they could still hold as support. So we got a beautiful wick holding. All we got to do is flip and drive, right? We got it. Hammer bar. Let's drive. Let's go. Where are we going to drive to? Let's see if we can fill a wick and a wick, maybe 50% right there. So I'm just grabbing my cut tool. Cut it right there. 50%, wick and a wick, 35 pips if we can drive right up to there, to that red line, okay? And then we're getting close to an hourly white line. I know that white line on my chart is hourly, okay? So, guys, that's not bad, guys. 30 pips, right? We encountered zero drawdown. Someone said, Ron, you put a 20 pip stop loss? Yeah, unrealized. I didn't realize any stop loss, nothing, no drawdown, okay? So if you still want to watch those 1 minute candles, we're breaking out beautiful. That bar that closed above, look. Point of control. We're continuing to drive. But that white line is hourly resistance. And our 1 minute candles are starting to get, overbought. So when sellers are selling now, when RSI is at 77, 78, let them sell all day. We're causing a short squeeze on them. Okay? So we're benefiting from it. Beautiful, guys. I'm going to scale out a little bit. I'm going to eat some pancakes. I'm taking out 80% here. And then I'm going to leave 20% running. Short wick, bullish ignited bar. Where's 50% of that bar? Guys, this shit's fun, man. I love this. Okay, bring your cut tool right there. And grab some money, please, guys. It makes me, just better on these live calls when I know you guys manage your risk. You guys got some money. More importantly, you learned, okay? Because this shit could come tumbling right back down on us. Okay, remember, the higher time frames are bearish. We basically, bought majority of today's daily wick right there. Okay, and I showed you guys 5 minutes and 1 minute how you can do this. Okay, but ultimately, controlling risk, stop loss went to break even. I personally scaled out up here. I'm happy with that. 35 pips, good trade. Okay. If you want to watch now, the 5, you got to wait for the 5 to close. It's still driving. Look at, wow. Okay. That white line is a target, guys. That's 50 pips on the dot. If it can get up there, then that's your hourly resistance. Okay, we're causing a beautiful trend reversal, daily point of interest, guys. Put the pieces of the puzzle together with me. This is good education, guys. I wish someone was teaching me this when I was growing up. I swear to God, I wish someone was teaching me this when I was growing up. Rich, what is the cut tool on TradingView? Just this one. I use this horizontal ray. It's this one right here. You know, there's the big one. I use this big vertical horizontal line for more higher time frame, like a big, but my cut line that's what it is. It's like just a cut tool. It's this horizontal ray. You can use whatever you want, like basically any line, okay? Okay, guys, everyone okay? Did I explain that properly? Is everyone managed your risk? You could also do trailing stop loss. Maybe a trade I take, I'm going to show you how to use trailing stop losses. Like once we broke above 50%, I could have taken my, like where I placed my order, for example, I could have had my trailing stop loss there, okay? Now this bar, when it officially closes, after the pullback, if it's still above 50%, I could take my trailing stop loss like towards the body, and then I've secured all of this money 100%, right? But I kind of, sometimes I'm a 1 minute trader and I don't have the luxury of doing that. So if kind of one or two or three 1 minute candles go 20, 30 pips, I sometimes just physically close the entire trade and look for another scalp, okay? But if you're on the higher time frames, like 5, 15 minutes, you got more time to physically watch and how it's building. So you see right there, like right there is 50%. If we can continue with a shallow pullback and continue break, maybe you can bring your trailing stop loss here, because I don't know if we'll come back down to revisit this, and you can secure all of that money. The only thing that sucks is if it ever does, come back down, that's it. Your trade is stopped out and you're out of it. And then it could continue to go, right? That's okay. What shoulda, couldas in trading. Who gives a shit about that? But the main thing is all of this you've secured, okay? Because if you don't, we've seen it where it comes tumbling all the way back down like that and you give away everything, okay? Trading is to also put some money in the pocket, not just hold unrealized forever, because what goes up can come down 2 times faster, okay? So just to make that clear to everybody. But you see, pullback, holding, 50%. Guys, we've made a little bit of a fair value zone, whatever the hell you guys call it these days. Sorry, I'm getting old, guys. I don't know all the proper lingo, but from that wick to that wick, you got a little meat of that candle right there. Have we retested this? No. We came close and now we're driving maybe. If we got to come back, there's another one right here and here. We can do this all day. Okay, this zone hasn't been tapped in as well. But there's structure involved. Remember what I say? It's the most important candle to figure out what is the most important zone. This one is very important because this was the first body that closed above this downtrend. This one is nice, but it still closed and we had bearish volume above us. But this one was kind of closing above. So this zone, let's see if it can hold in here. Okay, because this one really represents a strong candle that closed above here. If it doesn't, see how it's not holding? Now we got to go down to our deeper one. Remember, it could come all the way back down to where we started this move down in here, okay? So that's what I mean. See how it comes down bearish, bearish, bearish? Because when I'm in a buy and sometimes like that, I don't get too excited because I know that today is red all day. That's why I use this red. It's always to remind me that it is a red day. So when I get into a buy for 30, 40 pips, I don't get greedy, guys, because I know I'm trading in a red supply zone. A big seller could come in and just bring this right back down. This could just be another higher low right there. Beautiful move. A lower high, and then they could come tumbling right back down to the lowest point and drop it and go for a new lower low. Okay, so guys, and then we're going into 8 a.m. So this candle is going to close, and it's going to be the close going into 8 a.m. So if you want to look at your hourly candle, for example, you can go now look at your hourly analysis. Look at, like, we caught a beautiful bullish bar, 7 a.m. from the lowest point of the day, remember, but I was watching it on the 5 minutes, on the 1 minutes. I wasn't physically trading this hourly candle. So we're getting close to that hourly resistance white line. We've got a really nice bullish hourly candle that's engulfing this one and this one. Will it close above here? Because now we're not talking about 1 minute candles. We're not talking about 5 minute candles now. Now we're talking about an hourly engulfing candle that is very strong because it could basically engulf 2 candles in one. So that's, to me, it's a strong candle. It's engulfing 2. It's not just engulfing this one. Then our next hour, we got to continue to build and engulf. This one could eat both of these ones. Then it could pull back in the next hour, or it could open strong and we're continuing to maybe drive with this. So this hourly close is going to be so important relative to where this red line is right here, representing this hourly point of interest, this 3410. I can't tell you how significant this is. This one you can see is not as important. We got to now maybe, if what you can do too is once this hourly candle closes, you can eliminate these and figure out where 50% point of control of this entire hourly candle is, and then just make a new analysis. Okay, you can do that too. You can do that too. I don't think I talk about that too much because we're always on the 5 minute, 1 minute candles. I don't really teach you too much on the hourly, but I would like to. I would like to. Because I've shown for a long time what I can do on 1 minute, 5 minute candles. I want to show the swing traders what you guys can do too, and the intraday traders as well. Samuel, you scaled out half and had a 40 pip profit stop loss and then close up. Congrats, bro. Okay, so look at this. Like this, we can watch the hourly candle, how it closes. We can go to the 5 minutes. Okay, so there's the wick, how high we went. Look at the volume now closing strong going into the hourly close. Okay, so look, it's basically engulfed 2 bars. It came up, look at the highest point. We came up exactly 50% of the 4 a.m. candle. So we just engulfed the 5 a.m. and the 6 a.m. candle. So now look at how they opened it. Bearish ignited coming down. So will it retest this red line and hold and then flip and continue to drive? Or is it going to come deep, 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 deep? Let me just change everything, okay? So what I'll do is, watch guys, I'm changing everything. All these zones I'm eliminating now, and what I'll do is we'll basically do a new zone because our hourly candle, higher time frame, just closed. There's the opening price. There was the closing price. Let's find exactly where 50% cut right there is exactly half of our hourly candle. Let's make it a white line to represent the hourly, and we'll also grab our hourly zone, point of control, right there and there. So now we've adjusted everything according to our hourly bar that just closed, and now I can show you, we can flip back to the 5 minutes, and this is what we got, okay? So if it drives all the way back down, the hourly point of control is right there, okay? So it's still building a higher low, higher low. On the 5 minute candle, we did close above that red line. That was the close of our hourly candle, closing strong, 8 a.m. And let's see if we can continue, you know, to drive and get up to that hourly resistance. And that would be about a 50 pip move up there. If you guys are still holding, I still am holding 20%. I'm still invested. So, you know, and we caught an uptrend. Higher high, higher low, higher high, higher low, higher high, higher low. Just got to continue to ask to trade up here. Maybe in the new hour, we can get that and continue to drive through here. This is where you might have a bullish crossover on the 9 and the 200 EMA on the 5 minute candles and continue break. But it could come all the way back down and retest in here and then go back up. Okay, so that's that hourly point of control in there. Okay, guys, did that help? Amazing, 456 viewers. Awesome, guys. Can we get it up to 500 viewers? And then we're going to get US30. We're going to do NASDAQ soon. We're still not even in Colmex, guys. Wow. And guys, let's help us subscribe. Hit the subscribes. Let's get us to 420. 420 is our target for today. 83,420. We appreciate it if you guys can hit the subscribe buttons, like, and join the team. Okay, so what do we got going on? And we'll go over the news and everything in just a moment. And guys, we sent out a signal on Discord for a gold buy. If we just look over here, let's see. Okay, so at 7:51, we got a long gold signal at 3407. So you can see we did some kind of charting. There was a 15-minute candle that closed, and it's starting to run 30, 40 pips up here. So that's how you can kind of target, you know, exactly. Came down, there's a 15-minute bar that closed, a retest. You can buy, place your stop loss below here. We give it a little bit more stop loss on signals to allow it to breathe, to maybe get to target up to here, to the purple, to that black line, 34.15, okay? Filling back that imbalance. Okay, so, you know, could continue to drive. I've got hourly resistance at 3412, but 3415 right there, our opening day position, if it can retrace all the way back up there, okay? So guys, do you guys want to do one chart of US30 or NASDAQ while we wait for COMEX? You guys can, I hope, monitor this trade yourselves. Otherwise, we can sit and watch this, you know, going into COMEX, or it's up to you guys. I have 20% running at a break even, so I have no problem going to another chart. I've reduced my risk. I've taken some money out. So I'm more than happy to go do something else, unless you guys want to continue to follow this. Like, if you guys want to continue to follow this with me, we can follow it till COMEX news, and then we can do US30 and NASDAQ just after. But if you want to get one index out of the way, we can. I'll get it done in 10 minutes, 5 minutes. I don't want to rush it, but I'll do a good analysis for 10 minutes. Do you want to start off with US30? Okay, let's do that. Okay, so just guys, if you want to kind of recap that, watch the YouTube video later today. You know, I don't make too many reels. Maybe we'll get a guy that can make some reels or explaining these things. I don't know. Just everything is in here. I know they're long form. They're 2, 3, 4 hour streams, but if you just sit back and watch a little bit, you can learn so much, guys. So even the 1 minutes, you see how they came big bearish candle, but it came back up, trying to move back down, holding 50% of that. And now we're getting some points of interest on the 1 minutes, holding, coming back down, higher low, still building. Can we continue to squeeze out of here? Guys, I hope you learn, okay? It's a live trading environment. It's not easy to do this, but I hope you guys are learning. Let's do now, quickly, I'm going to shift focus. I need you guys to watch gold on your charts. I'm going to do US30 now, okay? So you can see how it's moving on the 5 minutes. That's fantastic. We can step in and start trading right here, but that's not what you primarily want to do. That's not how you want to learn. That's a bad habit. Start off always on a daily. Refresh your mind. How was it trading? You know, how was it trading yesterday, a week before? How was it trading back in December of 2024? Let's find our zones, okay? Right there, you can see that. That was a zone. I love when you're looking backwards because you can see it so clearly. And then when you stretch it into the future, it's, oh man, I see it come up there, December 2024, back down. I see it come up here, February of this year, back down. Double top M. They broke the support and big drop. That was going into Trump's what was it called, Liberation Day and tariffs and all of that, and kind of shocked the market. But then they called him taco. Trump always chickens out. Then the market kind of rebounded, came back up, and now look at, we're trading. Are we above this zone? Are we above? We came back in here again. It pushed back down. We came in here again. It pushed down. It's still a red zone. I don't see a blue candle closing above. I cannot make it green, just like I did on those 1 minute candles. It's no different on a daily. It's the same shit. You just gotta go to your time frame and wait for bodies to close. That's what's called confirmation. We confirm that the volume has closed above or below. While it's building, that's an impulse move. Any candle can go impulsively above or below zone, but it's where it closes, okay? So this candle on this day, Friday, August 22, it was an important day. That was the Jackson Hole Symposium, day 2, when Powell was speaking. He was very dovish on his language. He was saying that economy is doing good. We still got to watch tariffs, but it looks like it's good. Maybe hinting that could do a reduction in interest rates, and the market loved it. That officially, that bar closed above, okay? So now, same zone. I'm not changing the size of it. I determined the size of the zone back in December of 2024, right there, where I boxed all that shit in there, okay? And now it's closed above. I can see we already had a pullback Tuesday of this week, and it's coming right back up. Now it's got an ignited candle, bearish, coming down. Is this a double top and we're going to drop back down into this? But this now is a green zone. Stretch it into the future. Stretch it into next week, next month. Go like we did with gold. Go to January 1st, 2025. Go the entire year right there. January 1st, or sorry, 2026. Ron smokes a lot of weed. I don't even know what year we're in anymore. Okay, I thought we're in okay guys, so what do we got going on here? Have we came back down? Answer is no. Okay, can I continue looking for support levels below? I can do this all day, but that's why I got weekends to do this. You know, I take my time on the weekends to figure out zones. Right now, is Dow gonna break this and drop down? Unless something crazy happens in the market, I don't think something is gonna happen like that. Now let's start to dissect what's going on these daily bars. So there was Powell, important day. Do we have a point of interest? Okay, yep, right there. Powell closed, next day opened back down. We came back up to that white line. Do we see any volume closing above there? No. We had an impulse breakout yesterday where we almost created a new all-time high. They brought it right back down and closed that spin top candle. Look at today, bearish ignited daily candle. That could be giving us a hint that the market wants to sell today. However, if it gets a wick and comes back up, we could flip that and drive, okay? So why is this guy using a white line? I thought he's on a daily. Right, good. I thought I would try to trick you guys. I use yellow for daily points of interest. I'm on a daily chart. Can I mark the all-time high? Yes. We use an orange line for Donald Trump's makeup on his face. Right there. There's the Dow Jones all-time high. 45,765. We almost got up there yesterday. Like, look, now you look at zoom in, okay? So you see yesterday we came up. Did we tap? Did we hit that orange line? Technically, no, we didn't, okay? If I was to draw a yellow line to show you exactly how high we were, that's how high. That technically is a lower high than the all-time high. So the sellers stepped in and pushed it down. Did we close with any volume above here? No. So now, you see what I do? Watch, guys. I'm going to blow your minds today. Those two bodies, there's a gap in the market, okay? So you got to... And look at what I do. I bring it down to that next body, right? I'm going to make it neutral so everybody can see what I'm doing here, okay? You see how I kind of grab that base of volume, I know it's going all the way down here. Someone's going to say, well, Ron, why didn't you make your box all the way down there, right? Yeah, it's too big of a zone. What about right there? See this candle? We closed right there, right? Coming across, I'm still staying, going across. Look at this spin top candle. Yesterday was bullish. We came up there, came all the way bearish. Look at where it closed. Again, right in that zone. Look at today where they opened the ignited bar, right in there dropping. So this, we still have bearish volume below us. I'm going to make this a red zone, okay? And stretch it into the future, okay? So now, do we clearly see like how it could be a double top where it came in right there, came back down. There's the neckline right there. Came back. Yeah, I see that breakout yesterday, but it didn't create the new higher high. We're right back in that red zone. And look, we got a bearish ignited head coming down. So are we going to trade into 50% back of Tuesday's candle? Or are we coming all the way here? You have to have a yellow line down here. If you guys don't have a yellow line down here on your charts, please put a yellow line right now on your charts. Right here at the close of this body, the open of this body. If we come all the way down, that could be the neckline. There's your capital M. And then if it breaks, it could be a break. It could be an impulse like this day where it broke. And then we look to see, will it continue to fill that daily wick? That's a very important point of interest right there. Okay. And also maybe today, who knows? Maybe it might be a bearish engulfing candle close below there. If it closes below, then maybe expect a little bullish open on Tuesday when the markets come back up. It could come back up, then could lower high, and then markets are selling off next week. I don't know. But it's hard to determine that because we're nowhere near coming down there. We still have a higher low, point of interest, and a higher low. So it's still trending up. But the buyers got to prove to me that they're going to step in the market sometime because the sellers are showing me they're in the market. They opened the day ignited bearish. They're showing me they're in control of today's volume. The buyers have showed me they're in control the previous days. But when we're talking about today, I got to speak facts. The sellers are pushing down today. You can tell the way how they opened the bar. It didn't open and there was buyers stepping in right there. It just started dropping. So let's get more into what's going on here. So we closed right there yesterday on that shitty spin top candle, indecision. There was buying at the all-time high. Sellers brought it right back down, closed right there with indecision. Look at now where we opened today. Normally I have a yellow line right there. Okay, but it's opened right there, and there was no wick. There was no buyers. So that is the highest point of the day. It's where it opened right now. Purple line, 45,600 on the dot, guys. And it opened ignited bearish. Okay, we're pushing down. Remember, we just did that webinar or blog on ignited bars. I just showed you on the 1 minute talking about them. Look, it's ignited bearish, 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 bearish. So it's filling yesterday's wick, filling yesterday's wick, filling yesterday's wick. Let's place a line. Holy fuck. It is equal bottom lows exactly with yesterday. That is our lowest point exactly with yesterday. So they're holding it from breaking down right now. If this comes and breaks down, it'll drip right, keep coming down, and we need to revisit Wednesday's low, okay? If you want to calculate like a carpenter with your toolbox right here, get your measuring tape right here, and just measure from purple line to purple line. It is exactly 60 pips. If that breaks, you could look for a drop of 60 pips just to fill and get your money and get out, okay? That's scalping 101, okay? Yes, if it breaks more, we break and we're coming down to test body to body. Now you got a 120 pip trade. If it continues to go down, I got that one already marked, but look right here. Like there's a wick here. So, you know, you can continue to have points of interest if you like. If you can't say, if you can't figure it out, do I place a line right here? The Unk says maybe place it right there, right there, right there. Guess what you do, guys, okay? Let me clear confusion for everybody. Let me make trading so easy for even my 9-year-old daughter can get this. So if my 9-year-old daughter is asking me, Dada, do I place the yellow line here? Do I place it on that wick or that wick? You know what I'm going to tell her? I don't want to confuse her. I'm just going to say, grab your Rananachi tool and go from this yellow line to that yellow line. Let's make life real easy. And just pick 50%, right? And just place it right there. When in doubt, go with 50% right there. So you see, I'm not at that wick. Maybe I got a little bit of that one. I'm not. I'm at the exact average of this zone. Okay, and more than likely it might come down there and do something there. Okay, so that's for anyone that's confused which wick to place it at. Grab your Fibonacci tool and it will do the work for you. Okay, make trading easy. We should get a hat that says "Make trading great again." Maybe the Trump supporters would like us if we get that hat. Make trading great again. Okay. So we do technically have equal bottom lows today. That's important clue. Okay, so they're holding it right now. Now the buyer's got to show to me, can they continue to push up against this big bearish volume? Now, can I figure out the point of control of the current volume? I know it closes in 8.5 hours and Colmex is opening up in 4 minutes and Ron is talking a lot of shit here. So I got to speed up. Okay, so I'm finding the current, I know the volume is moving. Look how it's moving. So it's not going to be as accurate as a closed body candle, but right there is 50%, okay? Because if we come back up there, the buyers continue, maybe the sellers are stepping in right there because they open the bar very bearish, maybe they're going to hold it down and they're going to come back down. If the buyers can get it above this yellow line, then it's showing me that they got a little bit of strength on this equal bottom low and they could have the potential to flip today's body candle, okay? So just putting it out there. Now, okay, that's the daily, right? We see what the daily is doing. Let's go 4 hour real quick. 4 hour move. Okay, now I can see when we came up yesterday, 2 a.m. This was European time, and start to drop down. 6 a.m. we had the drop, came back up mid-afternoon, and we're dropping. 4 hour candles, you can see already have created a double top. This one top, neckline down there, there's the double top, and now it's starting to move down. So if our 4 hour candle breaks, there's those equal bottom lows, we could easily fill down to this purple line. That should be a yellow line. I got to change it, and then maybe this here, but right there, that's where the big volume is. That's where it's going to be the dogfight down there if it comes down there. Why do I know this? Because you can see there was multiple 4 hour candles of consolidating. That's a 4 hours, 8 hours, 12 hours, 16 hours, 20 hours in there of trading in that neckline zone. Consolidate it, trap it. If it ever comes back in there, that could be that big fight there where, you know, buyers could step in and there's your double bottom, right? But if I'm seller, I know that if I'm selling in there, I'm selling to buyers. Maybe it's important to close the bag because if you don't, you're coming in a deeper green zone where the big buyers are waiting, okay? So you got to be smart. Now, are we going to continue to, why do I have, let me just, sorry, I just screwed up on the daily. Yeah, that should be a yellow line right there. My bad. Okay. So you see, guys, if we get volume closing below these equal lows, we could technically push down. Now, on the 4 hour coming from Europe, right here, 2 to 6 a.m., can we briefly just grab, now that candle closed, it's verified, it's confirmed. Can I just get 4 hour point of control right there, 50%? I'm going to use a white line. Anytime I'm on 4H, 2H, 1H, I use a white line, and that's the hourly. I could also find the 4 hour point of control. It's still bearish, right? We're still below this. You know, if you drive it there, it was support there. You can see now that candle closed below. So flip that zone red. Okay, so if we're buying into a 4 hour bearish point of control coming from Europe. Okay, so we got to see a 4 hour bar maybe physically close above there so we can invert this just like we did on the 1 minute, 5 minutes, same shit. But this will be a 4 hour stronger move. We're not looking for 20, 30, 40 pips. You might be looking for 200, 300, 400 pips. Okay, if you're a 4 hour trader. But right now they came back up, lower high, they push it, but we haven't created any new lower lows. We got equal bottoms now and we got a higher low. So this is where, you know, it could be building, guys. On the 1 hour, I know we're 1 minute away from COMEX. 1 second, okay, but right, oh man, I got so much to talk about on this. I'll come back to this in a moment. We'll leave it US30 on the 1 hour, but let's see how gold is going to open right now on the 5 minutes with COMEX. Okay, so you see my 20% break even got tapped out right there. It came down to that yellow point of interest and coming right back up. So I got stopped out with my 20% remaining, and now, you know, I can continue to maybe trade with COMEX volume now. So if this bar closes above, look, it came all the way down, broke through the zone, hit the pending orders, came down to our daily point of interest, and look, it's a bullish pin bar candle. This could start that second leg that could be moving back up. We're closing back above the green zone in 7 seconds. Get ready. This could be like just a bullish move coming out of COMEX. Like right now, you know, there's the hammer candle, opened, ignited, pushback. Let's see if we get a pullback coming back down into the green zone, or will it hold that ignited open and just continue to drive? Okay, so it's coming back up, back down. You got to ask yourself, do you want to trade right away when COMEX market opens, or do you want to wait 1 minute? Do you want to wait 5 minutes? Those are, you got to have rules, right? You got to have rules when you're trading. If you want to flip to the 1 minutes, you could be physically watching. So you see how the 1 minutes came down? Look at what they tagged. They tagged the yellow daily line. Even a 1 minute candle can tag a daily yellow line, and look how it comes up. Bullish ignited, continue, maybe to continue to drive up, or they'll push it back down. I'm going to stay with the 5 minute. Okay, it kind of eliminates a lot of the noise. Plus, I need to breathe here because I haven't taken a breath. I need to drink something. Holy, this is a busy Friday, guys. If I do 1 minute sessions with you guys for like 4 or 5 hours, I'll probably lose my voice with you guys. Okay, so you see this red line now? We can still keep it on our chart, or maybe we can get rid of it. The reason why I'm still keeping it is because it's still at a very important area. There's a body, a wick, a body, body. It was resistance there. We briefly closed above it, but we didn't reach our hourly resistance, and it pulled all the way back, still holding, good bullish support, okay? So if you were to draw our original zones across, you see it broke through this one, but what held was our yellow line. So yellow line is more important than anything because why? That's our daily point of interest, right? So this 3406, 3407 is very strong today. I remember yesterday we were in a gold buy trading up to 3407. Okay, you can see how it's played in multiple days. It's a static daily point of interest. It came up. Now COMEX is beautiful. You know, I was guys, you probably think I'm lying when I tell you this, but I was 99.9% going to buy this candle. But someone's going to say, Ron, you didn't take it, so you're full of shit. Okay, you can say that. I can't have you read my mind. But when I saw it come down, and I'll be honest with you, if you guys want to believe me or not, okay? I'm a very honest person. It came down to that yellow line. It closed as a bullish pin bar, closed above my block, and it opened bullish with a small pullback short wick. Like, that would have been just a beautiful scalp right at market open for the COMEX. Just for a quick little buy with minimal to zero drawdown. I know you guys are probably going to say, Ron, you didn't do it live, so you're full of shit. I understand. But then I said we're going to wait 5 minutes for the bar to close. And that would have been a quick 15 pips. You know, like scalpers, this is what we look for. I'm telling you the mindset of a scalper. This is what we look for. It meets all requirements and putting the pieces of the puzzle together. When I see it tag that yellow line, I was doing US30, but when I flipped to this with 1 minute to go right into COMEX, this is what I saw. I saw that my 20% runner got tagged at break even. So, but then I saw how low it went. It went right down there. Got a it took out all of these orders and liquidated all of this. Came down to the daily position and look at where it closed. 99.9% to the high, and COMEX opened strong. You know, that could have just been a buy right out of the gate, just going with the flow of the volume. But I said I'm going to wait 5 minutes. But that's when you get a little bit more advanced in your trading, guys. Like, I want you guys to be there. I want you guys to know when it's time to do a trade with intuition, but you got to watch how it's building. Like, the build up leads to you know, the piece of the puzzle that you're missing. Okay. So it met all my requirements. It hit my daily yellow line. It came back up through that zone, closed above the green box, closed near the high, and just opened small, tiny pullback. And that I noticed the size of that wick on that candle. Like, that's all it is. It's just that pop, firecracker, and continue to drive. Now, this is why you got to be very disciplined as a scalper, because when you get your move driving like 15 pips, this is what they could do, because you're coming right there to a point of interest right there. You see that body, and a wick, and a wick. So they got you all excited up there, and then they slam it back down. Okay, so now this is why it's important to wait for bodies to close, because now this body's closing in 20 seconds and it's a bearish bar. So this could continue now with our bearish daily candle coming down, and that's like a double top up there. Okay, so that would have been a quick scalp in and out, but thank God I didn't take it, because now I'm waiting for this body to close, and it looks like to me it's a shooting star candle still transacting in this green zone. So is it completely bearish as of yet? I might switch focus. If a black candle can close below here, then I flip that red, then we're coming back down, taking out that, then we're attacking today's daily low maybe. Okay, so you know, that was a nice bullish move, but it's not like has reversed the entire daily bar candle. You can see right there, that's a lower high. We're still below our hourly higher time frame resistance, and we're still below here. So that's technically a lower high. We've met our resistance right now. So COMEX came up there. COMEX traditionally has more volume. It's an exchange for gold. Ask yourself, why did it not break there? Why didn't it break with that first 5 minutes of COMEX we got up there? You're telling me it couldn't just break that wick just by a few more points? Okay, something is fishy. So it came right back down. So if we're coming right back up, you know, you got to continue to fill that big wick behind. While we're doing that, there's sellers now positioning offers there, positioning offers there, positioning offers there. There might be more piling up at that hourly point right there. So you got to understand, offers are populating the depth of market right now, but we're still populating with buyers below us. We're still at our green zone. So now we've figured out where we've consolidated the volume. Right there, the red line. Here we got good support. Maybe we're going to come back up. Like, if it comes up, maybe we'll push and close, and then we'll get that higher high squeeze. But if we're coming back up, you know, up to this wick, and it's still lower high, and the sellers push it down, we got to acknowledge that the sellers are still here. We got our daily bar indicator showing bearish momentum, and then we could continue to come right back down. Okay. Yes, guys, and we do have red high impact news coming up right now. So in a few minutes, we're going to have our, Canada is important too, GDP month over month, but not important for the US dollar. This is important for the US dollar. Our core PCE price index, we spoke about that at the early of the call. We broke down what that folder is. That's coming up. And then we have 4 other low impact US folders, but the one that's going to hold the significance is obviously a high impact red folder. Okay, so it looks like previous month was 0.3%. Their forecast is the same, no change, 0.3. We'll see, is this above or below 0.3? And we've got the dollar pushing right now. It's showing some relative strength right now. It's looking strong. So we'll see what these numbers are when they are released. And just, again, guys, trade with proper risk management. Don't do anything silly. We already got a good trade. We got some pips in the bag. We kind of don't want to just throw everything right back. Let's see what will happen with the news. And then have news rules. Some traders right now are already predicting what the move will be, and they're already going in. But there could be volatility. Like if you're going in for a sell and you're placing your stop loss here, what happens if they just come up here, tag you out, and then drop it, right? What if you're buying, right, and then they just come back down here, whipsaw, take out the lows, take you out, and then it drives right back up. And you're like, I had the right bias, but you know, when the markets open up, there could be volatility. They know where pending orders are. Maybe they want to grab that liquidity. Unless it's continuing to move with the overall direction and just the news agrees with the direction and you get a nice move, okay? But right now, showing me bearish, okay? So it was a beautiful bullish move while it lasted, but you see, we didn't reach our hourly resistance. They lowered it. Something is telling me that they lowered the offer down, okay? So that's a lower high. Now we're pushing down. 1 more minute to go. We're transacting in that green block. If we close below here, it could open bearish. Come back down, target this low of the day. It could be a double bottom and come back up. But also below that low of the day is a shit ton of liquidity down there. Okay, you got to understand. There's a lot of liquidity down here. Okay, will the market come down and pick up this liquidity? There's also liquidity above this hourly white line in the market. So which liquidity do they want to come and grab? We'll figure it out. Okay. Is anybody in a trading gold going into news? Okay. All I can say is just don't over leverage. It is a Friday. Don't do anything silly. Okay. I know that you want to trade into the news. It's fine. It's fine. Sometimes I'll be in a trade and unfortunately the news comes up and I'm in the trade. But you got to just consider your risk when you're going in. Okay. This is not the time to gamble. Believe me. Okay, so let's see. And again, I'm going to wait for the first 5-minute candle to close. I know it could just be just a candle drop and go down, and someone's going to say I was already in. Fantastic. That's not what I'm going to do. I'm waiting for the bar to close. Here's the bar that closed right at the bottom. They opened it ignited, so it could just come up and they just flick it down and then it could drop, right? Notice how it's an ignited open, ignited, continue to drive. Will it take this out up here? Let's watch this. The US dollar is dropping. So what was the news right here? Where are we at? Core PCE. Oh, they're still pending it. Goods trade balance. Wow. Okay, so goods trade balance negative 103. Holy shit. Come on. They haven't released. Oh, okay. So core PCE is the same. That gross trade balance is really negative. So that's really bad for the US dollar. And we're pumping gold on here. So you see how it came all the way down right there, open bullish ignited right out of that zone and coming right up. Now we took out. Okay. So now they took out this hourly resistance. It came right up there. That was 1 minute. That's just the first 1 minute. Okay. Okay, now we got to officially watch the close, okay? So that news, after when you want to kind of dissect the news, you can look, what is this one? This one, goods trade balance. Like if you don't know what this is, pull it up, read it real quick. The difference in value between imported and exported goods during the reported month. There was a lot of tariffs. So did this affect anything? So trading goods make up about 75% of total trade. Therefore, it provides early insight into the trade balance data reported about 5 days later. Why do we care? Export demand and currency demand are directly linked because foreigners must buy the domestic currency to pay for the nation's exports. Export demand also impacts production and prices of domestic manufacturing. So is that why the US dollar dropped? Possibly, but let's figure out, maybe it was just an initial knee-jerk move and the market will react and recover. Did they swipe that liquidity up there? If we continue moving with today's daily candle, maybe they just took out some liquidity and continue selling this thing down, okay? So let's see where this bar will officially close. So you see how it came bullish, broke through the resistance, and right there at our white line. It's white line for a reason. If you were in a buy, did you do anything at that white line? Because if you don't, It's resistance for a reason, right? Let's watch where this bar will close. Will we get a majority of this bullish volume closing above this red line? Can we continue to build to break out of here? Or are we going to lose this bullish volume right at that news? Okay, look at it. Wow, okay. So they're really, really pushing it down. This could turn into if we lose this ignited open in 2 more minutes to go and closes below here, that could be a major, major liquidity grab to the upside up there and continue to smash this thing down. Watch this, guys. Let's watch the close. See, that's why I always ask myself, if you bought that, did you do anything? Because sometimes when you don't do anything, then it can come down on you. That's why I don't trade with, oh, I would have done this, I should have done that, I could have done that. That's how I used to trade, and I was always confusing myself. So if I was in a buy and it came to that hourly point of interest, that's where I say, guys, I do something. I either take my stop loss to break even, I'll close out 80%, I'll leave 20% running, because I've had this happen to me a million times. And then sometimes I do that, and then it continues to go. And then someone will say to me, well, Ron, why didn't you hold it? Because I trade with discipline. I'm a very disciplined trader. It's hard for me to tell people that because a lot of traders are very undisciplined. And when they see someone who's disciplined, they don't understand why I do this. But that's what, when someone says, what was your aha moment? Someone asked in the chat, I saw it the other day, said, Ron, what's your aha moment? What was that moment when it was when I started to become disciplined and just not worry about where it could or should go. I do my top down, and if it meets, a white line, a yellow line, I take money out if I'm in a trade, like I did with the earlier gold buy. Same thing. Tony, that goods trade balance should have been higher than a yellow folder. I agree with you. I agree. It's just so much impact right now with the tariffs and trade that it really impacted that folder. But normally it's a low impact folder. Traditionally it's a low impact folder because we haven't had traditionally these high tariffs in a long time. So tariffs have always been around, but they're traditionally lower than 5% across the board. Some are 10, but we haven't seen actual like 20, 30, 50, 100% in a long, long time. So yeah, they didn't change the impact of the folder, but anything to do with trade balance, goods, services, because remember, you gotta pay in that nation's currency in USD. Okay, so now what do we do? Do we just throw everything out the window, or maybe I'll find that was a big news candle. It closed above the structure. Maybe I'll pull this one back. I have my white line. Now I got to figure out a nice point of control. If we do get a good pullback coming in here, can we buy a discount? We let the news candle settle down. It did show us strength, did close above here. So it did close above. So that's a good structural candle closing all above. It's not like one of these ones I was just trading in here. That one closed above the resistance with conviction. So now either you're buying this candle, you're buying the continuation, or you're going to be a patient and disciplined trader and you're going to wait for something to pull back into this point of control of that big bullish news candle. Okay, so this separates now a patient and disciplined trader from someone that just wants to just buy now and go in. If you did that, it did create that higher high, but it could pull back down into here. Remember, the red line is here on my chart for a reason. It's been here all morning, so it could pull back here and get a higher low. Maybe it doesn't transact in here. But look at, guys, if it trans back in this green zone, there's the point of control, and you got your 9 and your 200 crossing over, okay? So if you do get that pullback, it could be a good opportunity to look for a discounted buy. However, it could move without us and doesn't pull back in here until 30 minutes later or an hour later, or maybe doesn't even pull back in here. So you got to make a decision. Is this a good candle you want to go in? All I would say is if you buy this candle, I would maybe consider placing your stop loss below that zone just in case it comes down there and then picks up those buyers, you're still protected. Or you could maybe place your stop loss below this white line. That's an hourly support, So if you are considering, the reason why I do this too is to consider where, if I do trade, where to place my stop loss. That's another thing. I don't just always just do this, but I'm also thinking if I was to buy this candle, maybe I place my stop below there and I got protection from that point of control. Wow, guys, 519 viewers. That's amazing. 519 is my area code in London, Ontario, Canada. So maybe that is a sign. from someone here. So 519 is the area code where I'm at. Let's keep it at 519. Randy, I moved to Mississauga. No, London, Ontario. Mississauga, what do they got? 416 or 905? 905, yeah. London is now 519226. What are your area codes? Where's everyone from? Where are your area codes? I got indifferent area codes. You guys remember that song? 305 Omar. 214 Terry. Okay. 437. People are probably wondering what the hell are these guys talking about. 113. When I go back home, I'm 011. Dallas, Texas, 972. Yeah, I know about Dallas. Okay, guys, off topic. Let's get back to the candlesticks. Okay, so now the news has been released. The market is digesting all of this. Our high impact folder, no change. The core PCE. This one, the goods trade balance was a significant. Look at they were forecasting negative 90.2 billion. It actually came out negative 103.6 billion. Okay. Personal income is up. Wow, personal spending is up as well. Okay, so Americans, you got to keep your spending down. I know it's hard in times like this, but keep your spending down, please. Be disciplined with your spending. Preliminary wholesale inventories are up as well. Okay, so we kind of escaped the news right now. Okay. Patrick, can I elaborate what you have in different area codes? No, bro. But we got. You guys want me to say it? I don't want to. No. We got females on the call and things like that. I respect the ladies. Okay, so I'll get rid of these. Guys, what I do is, okay, so if a trade gets away from where I'm looking to buy a pullback out of that news candle, this is what I do, okay? Here's the secret sauce. I place a line, whatever you want, whatever style line, color you want, and then I right click it and I add an alert. I create it. Guys, I'm not a advocate, I'm not a spokesperson for TradingView. I use their, they have right now 2 days, I believe. When you open up TradingView, they have like 70 or 80% off. If you're on the free one and you're looking to upgrade or go to a pro, the pro, you get more indicators. You get to utilize signals. It can email you when it triggers this. It can get sent to your mobile. It can make an alert right at your trade station. So right now they do have this offer right now. I think it's 70 or 80% off. It's a great offer. If you do your charting with TradingView, I highly recommend it. I'm not affiliated with these guys. They don't give me nothing by recommending it. We're not sponsored by them. I'm just saying, guys, when you're doing your analysis to make you that much better of a trader, you can wait for pullbacks and get alerted. You don't have to sit at your computer all day. This might pull back an hour from now, okay? But when it does come back down, I want to be alerted because then it comes back in that big zone right there. And it can also help with your charting and everything, okay? It can make you that much better of a trader. Also, look at it as you're investing in yourself, okay? I know when you're starting out, everyone, like, free platforms are nice, but when you start taking your trading a little bit more serious, you're investing in yourself. A nice trading platform, you're investing, whether it's 10, 15, 20 bucks a month, whatever it is. You know, I see people buying 2 Starbucks coffees every day, spending 15 bucks at Starbucks every day, okay? So, you know, when we're saying like 15 bucks a month, some people are spending $15, $20 on coffee every day. Just go buy a coffee machine and just make your own coffee at home and then invest in a good platform, okay? If you're a beginner, stick with the free version for a little bit, but when you want to take your trading a little bit more serious, invest in a platform. If you're incorporated as a business for trading, you can write it off as a business expense too, okay? Anything you use, your home office, your software, your anything to do with trading, you can write it off as a business expense. I'm not an accountant or lawyer anyways, but that's what I do. Okay, anything regarding trading, I write it off as a business expense because I've incorporated myself as a trader. But speak with a professional in your area code. Okay, guys. So it is almost 8:45. You know, gold is looking good. Okay. You know, there was that buy we had. It pulled back deep in here. So this green zone you can still see is technically still holding, right? So our zones are zoning. This zone is holding. This one is our point of control of the news candle, and it's continuing to drive, guys. Okay. So now we got our opening position here, that 3,415. Remember, we have it on our SST signal that could be a big target to hit up there. And that's a yellow daily line up there, okay? So if you're in buys, you know, consider maybe reducing risk. But that would be a good target, okay? That's the opening position, and then that's how close we are to the high of the day. So that Discord signal right here, the 3,415, what we were talking about, right over here. Okay, so it's almost getting up there. See what a quarter lot size can do too? Can make you $130 US. Just a nice quarter lot catching 50 pips. Not bad. So if you guys kind of got those prop firm accounts, or you're trading your own money, you know, it's pips add up if you do it correctly. Okay, $130 is someone's maybe daily wage working an 8-hour job. Okay, so now we closed above the hourly white line, so we inverted. The hourly was resistance, but we got 5-minute volume closing above, so now you see how it can flip to support. Right now it's holding support and we're continuing to drive. Last time we drove up here, look how many rejections we had. We had rejections there, came back down, came up there, rejections all the way back down. So now we're filling back up. If I was to just draw like a zone with what I see right here, I would be right there, right? A wick to the bodies, to the wick. So that's red. Continue into the future right there. Again, you see we impulsively broke out. The volume still stayed in that red zone, and there we just kind of broke through it again and could push down. If you get now blue volume closing above this red zone, 34.13, 34.14, and build off of this, we could build a position right back up to the opening price and maybe target today's daily high. And holy shit, that would be a big daily candle flip. Because when we're talking about the bigger perspective, when you go back to the daily and you look at the daily bars, remember how we're always closing lately? Like we close strong on a Friday and they drop it. Look at now, we could be flipping again and closing strong above here. And maybe this one might be the next week bullish breakout for gold, or they might again, you know, hammer it down and fake out. So wow, look how close today's daily candle is to maybe flip and continue to drive. So maybe the bottom is in on gold. There we come. We're coming right back up to that red box. So just with that red zone, stretch it into the future. You get 5-minute volume closing above. Flip it green. We might continue to build off of this. Okay. So are you guys all right on gold? Because you know, we're gonna shift a little bit of focus. We're not just going to do gold all day today. We got to finish up our Dow Jones chart. We left off on the hourly, and then we got to do NASDAQ because we got to get ready for Wall Street too, guys. Lot going on. Patrick, is it CHF pair that also correlates with gold? Yes, sir. CHF, the Swiss franc, about 60s to 70%. I don't know. I haven't looked at it in a few years. It's backed by physical gold. So yeah, CHF. Okay, guys. So look at that. Could reach target. Okay. That's a daily position. If you guys are in there, you know, if you guys took the signal, that's a target, right? 34.15 from the 34.07. Okay. So not bad, guys, if you got it. Right? Everyone on YouTube, thank you guys for joining. 500 viewers, we appreciate you guys. If you can hit the like, subscribe to the channel. Goal today is to get it up to 420. That would be a fantastic number for myself if we can get it up to 420. And there is a free Telegram linked at the top of the channel for you guys, right over here, guys. And there's a big promotion just added over here. Lifetime trade ideas. 2 spots available for $500, no tax. And what else you'll get is you get the Scalper Pro Algo. You'll get SST support and resistance indicator, the SST scanner, the SST daily bar indicator that I use on my charts. You'll get a 1 or 2 step prop firm account from Fixify and 1 month access to our Discord. So that's later on if you want to decide to join up with us this weekend. The more the merrier. We would love to help you guys and get to know you guys a little bit better on the Discord and with all the other snipers. Okay, guys? So right there, you know, sometimes is it going to pinpoint exactly the yellow line? Sometimes it does, but sometimes it misses by a few points and gets rejected. But let's follow where this bar will close. Because we'll flip that. And guys, like the dollar, US dollar, if you look at DXY, it's moving bullish right now. And gold is also moving bullish right now. So they're not always 100% correlated. If DXY is going up, that means that gold has to go down, and vice versa. If DXY is going down, then gold has to go up. That's not always the case. Sometimes they trade in tandem, right? You know, it's just that they're correlated doesn't mean that they move in opposite direction 100% of the time. I used to think that. And then I got into a lot of trades because of that, and it wasn't correlated. Okay, so just follow if you are following the US dollar and gold. US dollar could be moving up for other reasons, and gold could be moving up for other reasons too, right? Okay, so here's the close. Last 30 seconds are very important on every candle, okay? Every candle. If an hourly candle is closing in the last 30 seconds, pay attention to how it closes, right? Remember what we were doing with gold on the 1 hour? Look at guys, okay? So remember we bought this one earlier at 7 a.m. It didn't close above that red line, and then the hour opened bearish, 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 bearish. Look at the hourly candle. It tagged the yellow line, but we watched it on that 5-minute candle prior. That's when I was going to say, guys, I was going to buy that breakout right there, right before COMEX. So look at how the hourly candle came down, picked up support at the daily, and look at it come back up, come back up, come back up to the opening price. Small wick. So you see the hourly candle now has flipped. We're breaking up. We're getting up to now the daily position, our opening price of gold today, and then that's the highest point. So right now, gold is moving relatively bullish. This hourly candle is going to close in 9 minutes. If you guys are continuing to trade gold, going into Wall Street, and figure out where this hourly candle is going to close, listen to what I'm saying, guys. Please pay attention. Once this bar officially closes, get your Fibonacci from the opening price to the closing. Figure out the point of control of that hourly candle in case it pulls back. That might be a higher low support, and continue to build for the next hour. And we could be breaking today's daily high and trading up to 32.23.25 today, okay? But it could also come all the way right back down, okay? So if this can close, look, with some hourly volume above here, it could continue to move, okay? But that's for gold, guys. Okay, so that 5-minute candle officially closed near the high above, red to green. Now we're coming back and pulling back right into it. Will it continue to hold a wick, build, and drive out of here, guys? It could also flag above here. Look at that. Look at the retest, guys. Tell me that that isn't, in fact, correct. Red zone, red zone, red zone, red zone. Body closed above. Flip of zone. Pulled back right into the green zone. Wick. And then all you got to do is flip the candle, and you are driving to today's opening price and possibly today's highest point of the day. And it's all because when we kind of analyze down here where we took that buy earlier at 720 right in here, it's been making now higher high, higher low, holding the daily point of interest. New higher high, pull back, holding hourly support, new, possibly higher high, driving back through here. Okay, so I'm going to go to now US30, guys. You guys can continue to watch this. Let's do some index charting. So we were at US30 and we were at the hourly. So remember, I was going from the daily to the 4 hour to the hourly. A good point of interest now is hourly. Look at when we hit the lowest point of the day. There's a wick, a wick, a wick, a wick. See how I have body, body, body. So this is where I determine to draw a zone right there. See, what I'm doing, the size of the zone is from that body, body to the purple line. Then I can go backwards. I can see how it caught that wick and came back up. I can go backwards. I see how it's 50% point of control that. I can continue to go backwards. And then you see how it was a red zone there. Red zone, red, 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 closed above, green. Retest, proper. Retest, proper. Bring it across into the future. Retest, proper. Volume closing above. Continue with this zone in the future. So it looks like we're building a nice bottom already. This hourly candle on US30 is going to close in 6 minutes. Can we close above this red zone? Remember that red zone was 4 hour point of control coming from Europe. Can we close above it? Can we build off of this? Can we continue to maybe drive during Wall Street, or are they going to bring this thing down? So we've got good hourly support at the lowest point of the day. Okay, in order to continue to sell down today, we got to watch Wall Street. If it will take this out, close below it, maybe retest this, do something like this, then we're selling back down today. But right now it is technically building a little bit. Okay, so if you want to draw like a trend line, trend channel, grab your parallel channel, start it from above here, bring it down. You can as many touches as you can. So I'm touching the body right there, bringing it back down to here. That's my trend channel. So I can see when it came up, back down, holding the channel, support, coming back up, resistance, channel, back down, coming down in here, holding. Dotted line is a very critical point in the channel. That's your psychological 50%. Just like when we do Fibonacci retracements, same shit. That's your 50% retracement, holding dotted line. All we got to do maybe is get some volume closing above the channel, above here. Maybe we can break out a little bit bullish during Wall Street or going into Wall Street. Okay, so that's our hourly, looking real strong. Let's follow it on the 5 minutes now. So this is what we got on the 5 minutes. So it was rallying down, bearish, came back up, lower high, pushed down, double bottom, didn't really break, came back up, lower high. Then they broke it right there, came back up, lower high, new lower lows, lower highs. Then they really dropped it coming through Europe here. We made our lowest point of the day at 5 a.m. Eastern and coming back up, back down, coming back up, back down. So we're holding good. You can see that's that hourly demand zone. And look at our 5 minute candles. They are building a little bit of structure right here within that hourly zone. Okay, so right there, you know, when I draw a stronger green zone, if it pulls back in here, that could be a good opportunity. Look for a pullback buy. What I do is, again, I place an alert in there. If it ever comes back down in here today, I could be considering a buy in here. And it could be a buy protecting the lowest point of the day and getting a nice bounce off of here. Okay, now you can start to see this big bullish candle was news. 8:30 drove right through there, came back down. If you drew 50% of this and caught it, see how it pulled back in there, and you could be in a buy still. But right now it's struggling with that trend line coming from a higher time frame. So we're going into 9 a.m. in just 4 minutes. Let's see how we go into 9 a.m. We're going to leave it like this at our daily bar indicator. Okay, our daily bar. Remember, it opened bearish ignited. Let me just remind everyone, this was the opening price, bearish ignited. We did blogs and talked about how powerful ignited candles are. So it came down, lowest point of day, and see how it's building right now a little bit. It's building a little bit of higher high, higher low, higher high, higher low, new higher high with the news. Pulling back, still holding. Can we get some volume closing above here? Are we going to continue to go up further? Can we be able to convert this red zone into a green zone if we get volume closing above here? Maybe one more pullback. Or if sellers continue to push it back down, we could continue selling down with this volume today. Okay, so we'll watch this for about going into 9, maybe like 9:05, 9:10, and then we'll do a nice analysis on NASDAQ, and we'll get ready for Wall Street. If you guys got to go take a break, you're welcome to. And if you're watching gold, gold is beautiful. Pullback continuing to drive, okay? So it could be targeting that highest point of the day. And if it breaks out above there, right there, there's your head and shoulder pattern, okay? So if you're a 5-minute trader, I would be drawing a line right there. There's your left shoulder, there's your head, there's your right shoulder. So that is a point of interest. Look at the number, 3,420. Man, this number keeps creeping up on me. It's like it's telling me I need to smoke a joint right now. So 420 is in focus. Also, guys, can we get our subs up to 420? Oh, boom, we hit it. Thank you, guys. You guys are amazing. So Ron's going to smoke enough for you guys this weekend. I appreciate you guys. But keep that in focus, guys. Okay, why? Where did I get that line from? Right there. I'm telling you where I got it from. Anything above the purple line, we have not traded above here. That was the last time we traded above there was Thursday at power hour, okay? And there was the market close, 4 p.m. And that's when they dropped it, okay? So that is a point of interest if it gets up there, okay? But let's watch this US30. 90 seconds to go into the close. Keelan, you took that entry on the pullback. Congrats, bro. Congrats. That's good, man. Ifrin, what's up, brother? Bays, you bottom lick that liquidity sweep at 3405. Nice one. Nice one. Sometimes, man, when you hit those, it's a big boost of confidence. You know, right there, that liquidity sweep of 3405, you nailed that. Man, that's a snipe entry, bro. Respect. Efren, what are your thoughts on US30, bro? What are you thinking? Sarah, you got that too? Nice, guys. Nice. Guys, I lived through you guys. So if you guys got it, it just makes me that much happier, okay? You know? I love live trading. I love it, but I also love live education to teach you guys, you know, and then maybe some of you guys say, Ron, I use your levels while you're analyzing and it helps strengthen my levels and things like that. So it's good. It's good. That's awesome. Okay. We can work together. I like to take 1, 2, 3 trades per session, but sometimes you got to explain some concepts so everyone can learn. So when we get used to this, then we can trade maybe 3, 4, 5, 10 trades per session. But I want you guys to know exactly like what I'm looking for when I'm trading. So right now, that bullish bar, 9 a.m., closed above, right? So just right now, that trend line was resistance. It can turn momentarily into support. Did it close above the red zone? Yes, it did. So I got to go through everything that I do here. So it closed. It's showing me it closed above. So this zone now, any pullbacks could be a green zone. Where's the best area to buy? This is a shallow pullback. You can buy right now and get in there, but it's best to maybe wait right there at that white line or down to that green line. Okay, if it comes down to the green zone in there, that's called a deeper pullback, a discounted pullback. If you want to buy right now at 525, someone wants to buy at 512, they're getting it 13 points cheaper. If someone wants to buy it at 500, that person is buying in 25 points cheaper than where it is right now. So, you know, there is those traders that are now placing pending orders waiting to get filled down there. But sometimes the markets do not come down right away. Look at how it retested as soon as I flipped the zone, and it could be turning green and driving right back up. So some of these things are, you got to kind of go with the flow of how the market is moving sometimes, okay? So I'm just going to wait this out. It's got a big wick to fill. That was that news candle. So can it continue to fill that wick and drive? It's also at a daily point of interest right here. That was our previous opening price on gold today, okay? So we've retraced all the way back up to the opening price. That's a lot of work by the buyers, because remember, this was a bearish ignited candle. This was a massive bearish ignited candle that was black all the way down to here, okay? And look at what the buyers are doing. They're bringing it all the way back up. They're bringing it all the way back up to the opening price, right? So you got to kind of factor that in, how strong the buyers are at this level of US30 at 45,440, okay? So it's holding nicely. Will this momentum continue into Wall Street, or it's building until Wall Street opens and then Wall Street is going to slam this down, okay? So pay attention to this as well. because you can learn how things are moving going into Wall Street too. You might see something. You might spot this on another day of trading. It's building to come all the way back up, and then Wall Street slams it back down. Okay, so who knows? We'll see what Wall Street presents us in the next 30 minutes. Okay, so even if you bought that candle, okay, this, I know I did, shit, man. I got to get more like into trading 1 minute candles and quicker, because again, it closed relative near the high. I go over this all the time. It opened, bearish, retested when I went from red to green, good retestment, 50% of that point of control. And as soon as it came up, small wick, pop and fill. So as scalpers, I'm speaking to scalpers, 1 minute scalpers, 3 minute scalpers, 5 minute scalpers. This is a money making machine, this pattern, okay? And but you gotta know that you're only looking for 10 to 15 pips. That's it. We're not looking for 50 pips. We're not looking for 100. Scalpers look for 10 to 20 pips on average, okay? Looking for a 10 pip fill. And when you get really good at doing this, I know I hate saying this on air, because most scalpers that do this trade with larger lot sizing. For example, a lot size of a standard lot, that's a normal standard size. If you get 15 points, that's 150 US dollars in a couple minutes. And you're not thinking, can it go up? Can it go more? I want 50. No, it's 15 pips, get in and out. 150 bucks in your pocket. It's like me handing you $150. In Canada, that would be about 200 Canadian dollars. And I'm just giving you, every few minutes, I'm handing you 100 bucks, 200 bucks. You're going to tell me, no, you don't want that? I doubt it. So, you know, that's a scalper's mindset. That's how I trade. I'm a vulture. I look for like 3 or 4 or 5 of those scalps a day, and it keeps every other things away. So that, but you got to have that proper mindset, okay? Because you can get in, you go up 15 pips, and then they slam it back down to where you entered, and it could put you in drawdown, right? So that's more of a scalper's mindset, okay? And I know maybe some of you guys are not striving to be scalpers. I understand that. So then you gotta wait for pullbacks. We gotta wait for proper pullbacks. We gotta wait for bodies to close. You know, that's the difference. How's gold doing? Gold is okay. New high of the day. Congratulations, guys. Signal is signaling over here. Fantastic, guys. The long from 3407 is running over 100 pips. Congratulations to those who got it, guys. Fantastic. Okay. Good stuff, guys. And don't be scared to take some profit out of the market as well. As much as we want to hold trades forever, everyone does. It's good to compound your account. Put some money in the account. Not only does it add cash to your account, build your capital, it builds your confidence. It builds your confidence. Knowing that you hit a trade, you made some good money, put it in your pocket, look with that same mindset for another trade, because you don't want to go and have a demoralizing trade where it comes all the way up and then you want more. And you guys know markets can come tumbling down. It could be a staircase going up and an elevator coming down in just 1 or 2 candles on news, on market opens, on anything. And then you give away all your profit. And then maybe if you have a break even and you know how to handle break even psychology, that's different. But some traders don't know how to handle break even psychology. They don't even go to a break even. They have their stop loss sitting like a duck, waiting for the market maker to come and tag it. And then you were in a beautiful trade, you were in the money, and then now you get stopped out. How do you react from that? Some traders revenge trade. Some traders get pissed off. Some traders, like, they can't get focused again. And it's a big swing. You know, when we talk about swings in the markets, momentum changes, that could be a momental change in your trading. Like, that could set you off where you could be in a slump for multiple days, multiple weeks before you even recover. Some traders don't even recover. I'm being honest. They hit that slump and they're in slumps for multiple weeks and months and years, and some traders give up because they can't get out of that, you know. So you got to be very smart when you're doing this, okay? Very smart, disciplined, calculated. This is a business. This is not a some of you guys maybe treat it like a casino. I don't. I personally don't treat this like a casino. I'm not here to just play slot machines all day. I'm here to hit daily goals, look for proper setups, and do the best that I can on a daily basis. Some days are not as good as others. That happens. Welcome to the world of trading. I'm not here to say that every single day is a profitable day. No, I have shitty days. I have losing days, but I understand how much I risk each day. So, and I give myself like strikes, like a baseball game. 3-strike rule. That's it. In a baseball game, you would be out. You can't say to the guy, I want to go up to bat again for a 4th time. No, 3 strikes and you're out. So trading, same shit. 3 strikes, 3 losses, get out, review. You're not reading the market correctly. Okay, look at pulled back, holding in there, guys. Gold wants to, US30 wants to continue to. I'm watching to see if we can close above here. Okay, so we're getting close to 910. So I kind of want to put US30 side by side with NASDAQ. So let's do a quick analysis with NASDAQ as well and bring everything together so then we can focus on Wall Street with both securities. NASDAQ is a great security too. Not particularly my favorite. I like US30. I have my own personal reasons. I follow more US30 securities than I do just tech. But NASDAQ is fine. Beautiful. S&P 500. Someone says to me, Ron, why don't you trade S&P 500? Trade whatever you want, guys. Just find what you like. I can trade S&P. It's same shit. It's candlesticks. I can trade NASDAQ. Same shit. It's candlestick. I'm more familiar with US30 and I enjoy trading that. That's my opinion, right? But if you want, someone says to me, Ron, why are you not trading S&P? But if you want to trade S&P, let's trade S&P. It doesn't bother me. We can trade anything. When you learn this, you're going to pick what you want to trade. You will have the ability to do whatever you like to do. Figure out your favorites, But let's do a quick analysis. So we had big news for NASDAQ this week. NVIDIA had earnings. So while I'm just doing this, I'm doing my charting, like what I normally do. Sometimes, guys, I'm not going to always just explain why I'm doing this, why is that, and I'm just going to do my thing, okay? And then you guys probably know what I'm doing here, okay? So, that was a double top all-time high drop. We've closed above it. That's why the zone is green, stretching it into the future. Now, points of interest like pullbacks, pivots, this is what you can do. You can work from bottom up. So you see it move up when it first came down. Let's figure out a pivoting point. This is how you can get started. This is another way. I'll show you different ways how you can do top downs. There's not one set correct way how you can do it. Okay, so if we found our zone right here, we see it's moving up. Let's build with it, right? So it built, it came up to there. Okay, was there a pivot? Yes, there was. It came back down. Did it stop right there? Yes, it did. See how I'm figuring out my pivot points with the yellow lines. So then we move back up, new higher high. I can place that as a yellow line, but I like to do the orange all-time high for Donald Trump. There he is. There's Big Donnie. There's Donnie's makeup. All-time high, 23,985. Okay, now what are the results since we hit that all-time high on Wednesday, August 13? It looks like the market pulled back. Did it crash? Did it tumble? Is it stock market crash, the biggest we're ever going to see? Well, I don't see a stock market crash. I see it pull back, and I see another pivoting point right there that is technically higher than this yellow line, higher low. So continue, now we're building our way back up. Have we reached this orange line yet to create? No, it looks like that we've got a lower high now building. Where's it building? Okay, look at here, guys. We've got 5 bodies of interest right here. One yellow line will solve everything right there, right? Why did I place it there? Just look. You can see you've got a candle that came down, caught a wick, and went back up. You've got a body that impulsively broke and closed right there. You've got a spin top that went up and down and closed right at the yellow line. You got another bearish candle that opened right there, drop. We have yesterday's closing price at the yellow line. We have today's bearish ignited candle opening there, okay? So now, when we're continuing to now dissect yesterday open, pull back, higher low, higher low, higher low. Are we still holding? There's a little inverted. Look at the sneaky little cheeky little zone right here. This was Friday, August 22. I remember that was Powell speaking. And look right there, guys. That wick to that wick. Okay, for all those fair value traders out there, Do you guys do this? How do you guys do this? Okay. Do you look at that wick and that wick? I don't know, guys. Someone asked me, Ron, do you do SMT? Do you do ICT? Do you do ABC? Do you do CSI? I'm like, I don't know what the hell you guys are talking about. I don't know. I'm old and I don't know what you guys are talking about. I do this shit. Okay. This is what I do. Stretch it across. Okay. Whatever you want to call it. I don't care what you call it. Okay. To me, it just looks like a bullish zone. Okay. Forget all these fancy names. Who gives a shit? I find that too confusing. For someone trying to teach me that, I'd be lost. I'd be lost. I don't even know what they're talking about, okay? Inversions, this, that. I'm not knocking those models. I just don't know what it is. I got to study it and learn it myself. But I don't need to. This is working for me. What I do is working for me. I don't need to change it. When something is going good, I don't introduce new shit. I'm old school. I keep doing what I do until it's proven that it doesn't work anymore. For me, last 15, 20 years, proven that this method works, whatever I'm doing. So now I can see it came in there multiple times. Did we get any volume close below? No, still holding. Are we making some new highs off the top? Yes, we are. But we still have to acknowledge that it is lower than the all-time high. So they could pin it down right now, make a lower high and come back down. Okay, so where did we push up yesterday? We came up really bullish. We came through here, still lower high, lower high, lower highs. Close right there. So look at our opening candle and our close right there, okay? Is there a tiny wick? Yes, okay? So look, I'm zooming in, okay? So it's not technically, I cannot say a bearish ignited candle because then that would ruin everything that I talk about, okay? Because there is technically a wick right there, okay? There's the wick. You can see where we opened right there. I know it's a lot of lines, but we opened at 23,711. Look, and it moved up to 713. That's crazy. 2 pips and just came up there. So it had a long distance wick to fill anyways. So let's mark our long distance wick. It's fresh. It's yesterday's high. Place a yellow line up there. So we're nowhere near that right now. So I don't need to continue to dissect. But right there, I would have a yellow line there too. Body, and a wick. So I could continue to do this, but it's irrelevant right now because we got big bearish candle coming down. So you see, that was short-lived high today, and sellers are in full control. So let's follow this volume. Came down, came down, came down, came down, came down. That's our lowest point today so far. Now I can see some buyers are coming in prior to Wall Street, buying up right now and getting it right here. So that wick is in focus too, right there. So let's place a point of interest right there. Yellow line. We are below this right now. So if the buyers come back up to 630, it's only 25 pips away. Can they continue to flip the candle? Okay. But what I got to look for is yesterday's big bullish engulfing candle. I need to figure out where 50% and that point of control, that bullish volume is. I want to see if it will still hold in today's bearish candle. So there's the opening price of yesterday. There's the closing price. Notice how the 50 of that wick, is at that 618. That's where my zone is going to be. But so what I'm going to do is I'm going to take this line away. I'm going to place it right at 0.5 and then watch where I'm putting my zone. It's at that 618 and it is representing that wick as well. I'm going to bring it down to that 382. Now I get my bullish point of control of yesterday's volume. I can see now today we broke right through it. You can tell the purple line is low of the day and it's coming right back up. So we're buying, we're transacting in the green zone. Can we continue to push this thing up as if it was a 5-minute candle? We got to continue to push this up, buy, and then flip it, then possibly break out bullish. But these sellers could still come down during Wall Street, engulf this, and then continue to drop. And then this zone could get inverted on either a 4-hour candle if you're watching or an hourly basis and turn into a bearish supply. But if you're waiting to analyze the daily, fortunately, you got to wait for another 7.5 hours till this daily candle closes. Maybe end of the day today, it might close below here. Then you can flip that zone red going into next week. But we've established that from yesterday's big body candle. So I'm stretching it into the future, into next week. I'll decide whether it's green or red when this daily bar closes. But I don't have time, 7.5 hours to wait for this daily bar to close today. So I'm gonna now dissect 4-hour hourly, okay? So what happens if we do come down bearish back down here and it drops? So just think, bearish, 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 bearish. It's gonna do something right here. That's where bodies closed and opened, okay? So just, again, I place a yellow line there, okay? And then something might happen there. Maybe it breaks, and then you got to focus on that wick there, and then come into the bigger green zone. Okay, so now overall, what pattern do we see? What do you guys see? Okay, I see it come back down, hold. There's all-time high neckline somewhere like around here where the bodies are, come back down. There would have been a traditional double bottom. We got a higher low building. Okay, so it's a higher low double bottom. So there's the big neckline, guys. That's what they're protecting. Okay, the sellers are protecting this from doing this and doing this next week. Okay, so there's a lot of protection right now. Can they hold it? I don't know. Maybe we have another bullish rally today and squeezing short sellers. Everyone's trying to sell on a weekend and the market's going to go down, and then buyers keep buying and keep squeezing shorts out here. Or it could technically come down strong because this is also a lower high. If you look at it from this perspective, I know that the sellers are looking at it at this perspective. Coming up, there's the neckline to go down. It's coming up. So they're saying, Ron, this is a double top right here and could be coming down. Absolutely. Your perspective is correct as well. But it all depends on your time frame that you're perspecting it on. Okay. So that's the daily. Now for our, okay, we can see we are trending up. Came down here, kind of triple bottoms. There's Powell's big announcement, pulled back into the block, perfect. Drove higher high, consolidated, that's higher low, continued to break out. Yesterday, 10 a.m., big push. And then the market slowly all night has retraced all the way back down into here. So we could get Wall Street with a bullish move coming back up and creating like maybe a higher high or a double top on the 4 hour, or sellers could just kind of break it down during Wall Street and keep coming down in here. This 4 hour candle is going to close in 41 minutes. So you see it's already kind of transacted. If I just go with this bearish bar and figure out where half of it is, somewhere half of it has got to be right around the top of my green box. Like if I'm just looking for the halfway point, that's 4 hour volume now, okay? That's a 4 hour close coming from Europe. So that's all of the European volume right there. Basically, there's the halfway point. I go white for hourly. And then this is where you can alter it yourself. Now you can take your green zone if you want and just bring it a little higher to represent right there, 50%. Okay, that was me now manipulating my own zone to just keep me aware that maybe we need to close above that 4 hour to continue to go up bullish. Anything like here could still be bearish. So our 4 hour candle now is trading in that bullish demand zone, but the buyers got to close it strong to get it above there. Okay, so let's look at how it's moving on the hourly. So we had our hourly move yesterday, big move out of Wall Street after our call. It retraced all the way back down. So, you know, if you bought that all day and you held that move and you are loving life and you're already looking at the color of your Lamborghini, you're calling the dealership, you went up 200 pips and look how it came tumbling right back down to where you entered anywhere in there. And then you just gave a daily wage away. Okay, so that's what I'm always saying. What goes up can come down. What goes down can go right back up. You notice these sellers that came down, they didn't realize anything, came back to their break even or stop loss. You'll notice that a lot in trading. Okay, so that's why I have a habit of always trying to the best of my ability to lock in profit. Okay, because I know trading, you give a lot away of your profits, right? So when you get, number one, it's very difficult to get into a profitable trade. So when you are in a profitable trade, try not to give it away. Okay, because a lot of traders have difficulty even getting into a profitable trade. A lot of their trading is always in deep drawdown. Okay, so if you're getting in a good habit of selecting good trades and you're in the money, now your next job as a trader is just to try and think what works best for you. For me, it's an 80-20 rule. For you, it might be 60-40, 50-50, some 40-60, 25-75. I don't care what it is, but figure out what's best for you, or even like a trailing stop loss. And the point of the game is to compound your account and build capital, because then it's just a game of small percentages. If you look for 0.5%, 1%, it's doable. I know everyone in the group here in Discord can do 0.5%, 1%, probably no problem now. Some of you guys are going to say, Ron, I'm getting 2%, 3%, 5%. That's fine. That's beautiful. But try and stick consistent, 0.5%, 1%. When you can do that with a $10,000 account, just do the math, 1%. If you can do it with $25,000 account, do the math. 50,000, 100,000, just do the math. It's 1% across the board for everybody, but the guy who's got the $100,000 account is making $1,000 a day. The guy with the $25,000 account is making $250 a day. So just a game. It's a game of capital. There's someone in the group that might be trading with $1 million. That gentleman with that 1% is making $10,000 a day. Okay, so it's all a game of capital. capital. Big banks trade big capital. Big institutions trade big capital. Okay, so look here, guys. Going into Wall Street, our previous hourly candle did push up, close. Look at where we're closing. Relative into this pocket, 50% here. We're coming back down, we're holding. So we could initially get a Wall Street open and drive a little bit, okay? Where do we have focus? I would be focusing somewhere like above here, maybe 650. I would go more with, see, again, guys, I'm trying to figure out where to place a line in between here. I can do this. I'll show you guys. Okay, right there, I got a body, a body, a body, a body, a wick, and a wick. Or we can do what we teach our kids. If I can't decide, grab my Fibonacci tool from this line to right there. You see, I could go right down to when I said when in doubt, go 50% right there, okay? So I was going more technical right there. It's at the 618, but you can go 50 if you like right there, okay? And that's where I'm going to leave it, okay? I want to see maybe if we break out bullish, comes up there, maybe encounter some resistance, come back down, or we blow through that, okay? But right now, we have a bearish ignited candle following a rejection the previous hour. So we opened 9 a.m., came all the way down. We're holding our daily point of interest and 50% of the previous bullish volume coming back up. So we could technically open Wall Street and drive, or it's ignited for a reason and they're going to continue to push this thing back down, okay? And look at where we're transacting. We're transacting in a green zone on the higher time frame, okay? So this is going to be a fight again. We've seen Wall Street open this week. It's been very choppy for multiple days this week. We might get that as well today. So now on the 5 minutes, I can see it was trending down prior to 4 a.m. It pulled back up, continued to go down. It just pinned the lowest point of the day at 5 a.m., came back up. Looking, it's trading like US30, and it came down, held the bottom. Excuse me, the 830 news candle, bullish, and we're still holding here. So we're kind of just, if you want to box all this garbage volume in, sorry guys, I'm losing my voice. I need to drink something. Okay, so we'll just box it in right there. Okay, so that's our NASDAQ. Let's add the daily bar indicator. Remember, it opened like very bearish. We do have that little wick up there. That's why there's a yellow and a purple line next to each other. I can get rid of the yellow line and we'll focus more on the purple line. And it came all the way down. There's where we hit the bottom. This is the little bit of a build-up, but they could slam this down, Wall Street. Like they could continue just slamming it down and break the low, and it says selling day or a bearish daily candle, okay? Adding EMA's 9 and our 200. We're at our 9. 200 is right up here at the top of our green zone at that hourly interest point, okay? So let's put these two side by side, 5 minutes away. We're going to be into Wall Street. It's a Friday, guys. Don't do anything silly, please. Ron needed to grab some liquidity. You're right. Yeah, I needed a drink. Okay, guys. So, does everyone have a plan now going into Wall Street? Here's US30, NASDAQ. Pick your security that you want to trade. Right now, it's still consolidating in there. So, right now, prior to Wall Street, like you can see, it's been coiling up. So, there's going to be a redistribution of the volume. Like the buyers are accumulating. It might just break out bullish and just drive. Okay, for those scalpers that enjoy that market open excitement. Follow your 30-second, 1-minute candles if you like. But also sellers are accumulating here too. When it comes up, it goes down, goes up, comes down. Maybe sellers will redistribute to the downside as well. Same here. Like you see NASDAQ accumulating, they might break it out. It might break out prior to even Wall Street opening up. But have rules. Either you're going to trade right off the market open, or you're going to wait for a 5-minute candle to close. Some of you are, I know, trade 15-minute candles. You wait till 9:45. Some of you guys are waiting till 10 a.m. Let all the noise, let everything settle down and trade after. Okay, there's nothing wrong with that. But here we go, 3.5 minutes. Again, just quick. Do we have any news today during, I believe there was a 9:45 folder. Yeah, the Chicago PMI low impact at 9:45. Then 10 a.m. we've got revised University of Michigan consumer reports. Okay, so that's what we'll be watching. Guys, hit the like button. Amazing. If we can get this to 500, that's unbelievable. That's a psychological number, 83,500. That would be amazing. Okay, and gold, guys, look at what it hit, the red line, 420, and dropping down. So, you know, where did I get that red line from? Remember, I looked back that head and shoulder pattern right over there, and you see how they pinned it right at the red line. Hey, this guy knows what he's talking about, right? So if you got your profit, you can lock in there, right? You can scale out. That's an important point of interest on gold. Can it come down and go back up? Absolutely it can. But sometimes if you just get in a habit of learning how to do this, then you're going to know that your analysis is correct, right? Okay, but let's focus on NASDAQ and US30, guys. Let's see what's going on in the pre-market. Just some normal names that we always talk about. Let's see what we got here. Alibaba is up 8% in the pre-market due to their earnings this morning. Alibaba. AMD is down 1% right now. Micron had a big day yesterday. They were up 3.6% and they're up 1.5% in the pre-market. Uranium, UEC, we were talking about this security. It's up 4% in the pre-market. Nvidia is down -1%. Meta Platforms is down 1%. Google 0.5% down. Amazon flat. When I say flat, it's like relative 0%. Palantir -0.7%. Okay, those are just some. SMCI, okay, tech is down -2.5% pre-market. Okay, those are just some notable names on here, okay? And next week, I'm going to do something different with you guys, okay? How much time we got? 1 minute. So next week, what we're going to do is, when I do US30, side by side will not be NASDAQ. We'll do US30 and United Health, right? We did that. We did fun yesterday with NVIDIA. And then the next chart will be NASDAQ with NVIDIA, right? And then maybe we'll do gold with US dollar, okay? So we can kind of see how the index moves with the big name stock security, okay? So we'll do that next week, guys, okay? Okay, so look now. Wall Street's about to open in 45 seconds. Look at that. Did they fake out already, grab the liquidity? So they took that high, they broke it above that daily yellow line position, and it looks like they want to push it down, okay? So right now, they have scooped liquidity, okay? Whether it's high liquidity up here at the high of the day, it doesn't matter. But they took out that point of interest right there on the daily and grabbed it and rejecting the move. So this could open bearish and drop, market open, since they've already, orchestrated the heist up here, or it could just be kind of, comes down and goes back up bullish to retest this, okay? We're getting a lot of indecision too with NASDAQ and US30 right here, okay? Have rules, guys. Trade with proper risk management. Don't give too much back to these markets. Don't gamble. Play smart. Here we go. Okay, so open bullish ignited just out of the gate, okay? So, sometimes it's too fast. That's like the first 3 seconds. Unless you're in a prior trade going in, that's fine. But look at NASDAQ came up, back down. Let's see if US30 can come up. Maybe will it go back down or hold. I'm going to wait for the first 5-minute body to close regardless, okay? So there's nothing wrong sitting back, watching. I know it sucks when we're live because, live traders normally are live trading, taking trades, but I'm not that kind of guy. I'm going to teach you guys patience, discipline. If you guys want to go to 1 minute, so you'll see a circus. I'll go 1 minute scalping, no problems. But I'm going to put in the title, 1 minute scalping, viewer discretion is advised, okay? Parental control, because then it's going to get wild, okay? Then you'll see a trader who takes a lot of trades, okay? But I want you guys to work up to that session. Okay, so let's see. We got mixed reactions on NASDAQ, came up, back down, coming up. We got a beautiful bullish ignited open on US30, okay? It's good to note, good to follow. Where will it close? I'm looking to see if we're going to flip the daily bar candle. I don't know about you guys, what you guys are looking at, but I'm looking to see if this bullish candle breaking out of Wall Street is going to tag that high of the day and make a new high. Or is this bearish ignited head, this hanging man, on the daily still holding? That's what I'm looking for. Some of you guys are just looking at this volume right now, how it broke out, exciting. I'm looking at a bigger picture over here. Okay, and look at how choppy NASDAQ is, okay? indecision. Like, even if it wasn't a market open, that's a crazy, shitty candle to even be considering trading. The only one that looks decent is this bullish ignited candle on US30. Okay, we haven't even reached the halfway point. We're still at 2 minutes and 43 seconds to go, even till it closes. Okay, so and now they've rejected the move. Are we going to lose this ignited open? Okay, and we got a sell signal looking to sell NASDAQ below 602. Okay, so 602, 603 on my chart is basically below this yellow line right here. So let's see if we get some 5-minute volume looking to close below 600, 602 here. And then maybe we could look for a retest and maybe a sell off of it. Okay, this is the impulse candle breaking down. I also look, if I'm not in the trade, I look for how far will it break down? Will it take out that low? Will it come take out today's lowest point? Will it come just down here, be a higher low and come back up? Now it gets interesting. Now we're about 90 seconds to go into the close. Gold is pulled back, pumping right back. So your next target for gold is the yellow line, 3,423. The daily candle is flipping into a hammer. You could easily fill, and guys, this huge zone was the all-time high supply of just above here are those wicks to the all-time high. Okay, so gold is extremely bullish. Okay, so we at least we had a good analysis on the gold buy earlier this morning. Okay, so here we go. 1 more minute to go into close. US30 looks like it's closing strong, maybe above that daily line. Okay, but it's until the candle body closes. That's why I don't get excited until the body closes. I've seen the craziest shit happen where it's 4 minutes and 45 seconds is a huge bullish candle. In the last 15 seconds, they slam it down. Like, I've seen that. You probably have seen that too. So I wait for the full body closure and then I analyze. Sometimes you got to be real quick. So that's why you got to follow it as it's developing. That's why I'm not looking at my TikToks. I'm not scrolling through and looking at YouTube videos right now. When I'm watching candles, I'm focused. I watch how it opens, how high it goes, where it closes, all of this. I follow it like it's tic-tac-toes. Okay, here we go. So NASDAQ, remember, close below that. So if we can look for, a sell at that 600, 603, maybe we got to wait for it to pull back. Maybe back to that daily point of interest right there. So that's why I'm making it red. Okay, it might push down. Will it pull back? It hasn't pulled back as of yet, unless you want to just jump in and just start selling. That's up to you. But remember what we're trying to learn is how to see if it will come back up, trigger in there, and then go back down. Okay, so that's what we got to watch for. Okay, otherwise you just entered in that candle. That's fine. Some traders do that. Okay, but the other ones that are trying to learn how to be patient and disciplined, you got to learn how to wait. Will it come on the next candle? Maybe. Will it come 10, 20 minutes later? Maybe. Will it come an hour later? Maybe. I don't know. But that's how you got to figure out to be patient and disciplined. Is anyone in a trade right now regarding NASDAQ or US30? I haven't entered yet. I'm waiting for maybe a possible pullback right here. Because we did have I'll show you guys like the signal for indice right here. Sell NASDAQ at 23,602, released at 920. Okay, so that's what I'm watching. I'm watching that right there. That's 602 right in here. So I'm looking for that pullback to come right in there. I also have my yellow line as a daily point of interest there. So now maybe we'll push back up and retest this. Maybe that's as high as it will go and go back down. Okay, so you got to continue to wait for that pullback. I know it's not easy. Okay, so we got a bearish move without a retest, so it's coming down. Okay, so what I look for is like that low, will it get taken out? Because that's the last low prior to hitting the lowest point of the day, so they did take it out. Okay, so now we got a drop. Unfortunately, I couldn't get in because I was waiting for a pullback. That's what sucks, guys. That's why I like scalping the markets, in my own personal opinion, you know, because sometimes you're waiting. You got at the closing candle, it did come up a little bit and then kind of break. I like to sell those, I like to trade those, but I don't want to make excuses and say I would have done this, I should have done that. I told you guys I'm waiting for a pullback at this 602 area. I'm waiting. Okay, so but also don't neglect what just happened there. So they just took out a low, the lowest point of the day. Okay, that's important because in order to continue to push down, you do got to create lower lows, right? So they just showed us that they did in fact push for a new lower low. Okay, so but when you do break those, there's buyers down there. Okay, so the buyers now could bring it back up. That's why I'm waiting to sell possibly right there, because when they broke that low, then now offers above us. I know a lot of patient disciplined traders don't watch depth of market or really care about that. But let me just tell you what's going on. Those orders, those pending offers above there, when they see a new low is broken, maybe they're positioning lower and lower and bring their offers here to continue to keep the momentum going down. So, you know, I'm waiting for it to pull back there. Maybe more sellers are now populating in the market there. Can I get that? Will it come on the next candle? Or again, I got to maybe wait till 9:45, 10 a.m. Okay, so what I like to do in those situations, again, I'll show you what I do. There's a line there for reference. Right click it. I add myself an alert. Okay. And US30 is not doing much either. Okay, so still kind of trading in this. It did break out, come in here, still holding. And if this bearish bar closes below, okay, now then I got to do a structure, okay? So then I got to look at 50% of that candle, right? If it closes below here, this is a big body candle closing below. The pullback might be right here, okay? And then maybe I got to get in a little earlier than that official pullback. So, man, I got to go quick on this. Open, close. Oh, man, as soon as it closes, okay? Okay, see how I'm following down with it? Holy shit, hit the next daily point of interest. Damn. Wow. Okay, so NASDAQ is getting killed right now. Okay, there's the close. Close right below. Guys, short wick, ignited candle could continue to pop down. Where's 50% of that big body candle? It's right there. Where's the bearish point of control of that candle? So, you know, like I know some traders are waiting to get that pullback, but you know, this block might be the lower high pullback right now. Okay, so that big entire green zone, remember that was that 4-hour point of control coming from London. Now it could represent supply. Okay, so now we're coming back up bullish. Okay, so will it come into here again? Will it be a lower high and then they drop it? Sorry guys, I'm focused on NASDAQ today. I don't know why. Normally I'm always looking at US30, but today NASDAQ. Okay, so they rejected it down. Okay, if you lose that candle, you know, maybe you got to continue to go down with this. So shooting star, okay, just came down, back up. Watch now, the blue volume, is it building back up? Will they reject it back down? Or is it building back up to retest? Pushing back down, can it build back up? Okay, can we technically see a retest in that point of control, that bearish candle? Or will it come all the way to that 600 level, get the real retest up there? Or is it just going to be lower high and they're going to continue dropping this thing down? Okay, so it's still got a little blue volume. Lots of time left on this candle, 3 minutes. Okay, so you see, now we're trading right in that pocket right there. Okay, so will it get a rejection in there? Will it come all the way through there? Okay, so we came in there. So it's trading right in there now. Okay, will it come higher, higher? We're right in that 50% of that the second 5-minute candle, the bigger body one that closed below the lowest point of the day. So that's a very powerful candle, like a statement candle. That 935 closed right below the lowest point of the day. So now we're retesting in here, but the buyers are still now got it above there. Will it come a little higher? Well, are we going to retest our actual location where we're looking to take the sell? Will it come all the way up there? Maybe. Maybe not. Okay, so now it's coming up real nice and big and bullish. Okay, maybe we'll close here. Maybe the second bar will be bullish, coming right back and test our location up here. However, it could just get a lower high and start to push down now. 2 more minutes to go. 9:45 news. Yeah, it's a low impact. I understand. Yeah, okay. So big rejection. Okay, look at it. They rejected everything. Do you want to sell as soon as it loses its and drops? Or if it fills up a little more, then you drop down with it. Okay, this bar is going to close in 1:45. Also, yeah, Ephraim, thank you. So remember, guys, there is 9:45 news coming in at Chicago PMI. Okay, will it have a huge impact? It will have a little bit of an impact, but is it going to be significant? Okay, so we came in there and now could be pushing down. So this is the hardest part. Do I take the sell now? Man. But if you guys are learning about how they can come into point of controls, that was a big bullish candle that came right in there, and the sellers are there. Okay, I was waiting for up there, but that's how you guys got to learn too, that there's another block in the market as well that formed. You took the NASDAQ sell, Sherry? Okay, let's see if we can continue pushing down with this and just drive down. There's our next yellow line, daily point of interest at 486. Down in there. Wow, US30. Whoo, man. Will it flip this daily candle? My goodness. And we got news in 30 seconds. Bays, what is that? Gold is dead now. Move has happened and there's no way to know how far the extension goes? Absolutely there is. Absolutely there is. You got to learn psychological numbers. There's always a way. Don't be negative. There's always a way where you can figure out. You just got to do a little hard analysis. Okay, so we did close. Bearish ignited. They're dropping some news right now. Oh my goodness. Why didn't I sell this thing? Shit. Oh. This patience trading is killing me. It's so hard for me as a 1-minute scalper. I'm telling you, it's so difficult to do this. But I'm not making excuses. I gotta be disciplined, right? Oh my goodness. Oh, I don't want to look at these 1-minute candles. It's killing me looking at those things. But regardless, if there's a pullback, we're coming back in this zone, back to that zone. Okay, sometimes when you want to get cute, when you want to wait for exact numbers, this can happen. If you guys sold, God bless. If you guys sold NASDAQ, man, I'm going to live through you guys. You guys shorted it, congratulations. Shit. Okay, so yellow to yellow, guys. Right there. So we just took out that low. Normally what I look at is to the left of the chart right there. Took that position out. If it gets down to that yellow line, that's a full fill from a yellow to a yellow line. Tammy, you got 1%. Sherry, you got it. Dave called it out. Perfect. Good. Man. Chicago PMI news came out right now. Actual is out. 41.5. Wow. Okay, so Chicago PMI, that's a big decrease from the previous month and the forecast. Again, guys, sorry, I didn't go over what the folder was, but what this is purchasing managers in the Chicago area, what it's all about, economic health leading indicator, the Chicago Business Barometer, all of that, okay? But, oh, shit, man. I missed that point of control cell. Oh, my God. This is what I hate. Oh, frustrating. Man. Sorry, guys. That's just me getting frustrated over here. But missed opportunities happen. Okay, so I don't want to get angry. I don't want to do those things we talk about, get mad, just start selling the lowest point because now it's fear of missing out. Oh my God, it's going to go down. No, because whenever I do that, then it comes all the way back up and then it retests the zone. So, the move is gone. I can't chase this. It's like the bus that leaves. I'm not going to run after a city bus, okay? I'm going to wait at that shelter and just scroll through my phone and wait another 20 minutes, 30 minutes, and then another bus will pick me up. Same with trading, okay? So now, if it pulls back, maybe back into maybe this block right there. Maybe I could look to short that again, okay? The ultimate premium short would be that area, but that could be another one. Also, maybe 50%. This red line could represent 50% when this final bar closes, and it could be a pullback right into there and selling that, okay? Denny told me to stick to the 1 minutes. I know we were cooking on that gold in the morning. I should have just continued with that momentum on the 1 minutes. How about next week we dedicate one live session to 5 and 1 minutes? We'll do top downs, but we'll do what we did with earlier with gold. Okay, for one session. And we're going to focus on 5 minute, 1 minute, 5 minute, 1 minute. Oh, Volume Productions, thank you, bro. I appreciate you, man. You don't always have to do the donation, but I appreciate it, man. I could use a coffee today. Thank you, man. You're awesome. I know you're showing your appreciation. That's huge, man. But thank you for that. You don't got to do that, but regardless, thank you. Okay, guys, gold. US30 broke the daily high, and then look at how it's coming down. So if you were in a buy, it's a beautiful buy. Again, maybe you should be doing something up there. Okay, it's a daily high for a reason. It filled up nicely. And also, if you're in NASDAQ selling, if it reaches that yellow line down there, it's yellow for a reason. Okay. Your RSI, wow, okay, so like all the RSI traders, okay, it's gone down to what, 18, okay, 17, and look at how deep it's selling, okay, so it's, it's a weak area, so it makes it easy for sellers to redistribute all of that accumulated volume and just break it down, break all structure, okay. Guys, I'm sorry, I apologize, okay, my fault there. I should have sold this candle at 940. It's my fault. I was waiting more for that pullback at this 600 level, and guys, but it happens, okay? I don't want to make excuses just because it's alive. There's if you're waiting there, you're waiting. There's other traders that are waiting up there, and it doesn't come. But what I want you guys to understand is don't get frustrated. Don't get frustrated, okay? Like me, I'm getting frustrated right now, and could cause me to do something silly, like just FOMO. When you're FOMOing, you're seeing all this selling candles and you're like, man, I missed out. I got to get in now. So now you probably look to sell, and look at where you're selling. You're selling at when RSI is at the lowest point. You're selling at a daily point where the buyers are stepping in, and then that's when it will reverse back up, and then you get put in severe drawdown. And then there's those patient sellers that are just waiting right here, and then maybe the market will come back up to them, and then they can continue selling down with the market. So let this be a lesson, guys. Let this be a lesson, okay? Just stay focused. If you miss a trade, you miss a trade, okay? I'm showing I missed a trade. Right there, I had to set up in that point of control. I even said, guys, this was a very important statement candle. That was the big body candle that closed below the purple line, right? You see how US30 got up to the purple line? I don't see a conviction candle. I don't see bullish volume closing above that purple line. We see it here. So this is a lesson for everybody. This is a very important statement candle. That candle was important at 9:30. That's the one that dictated the move. But this one is the one that actually physically closed above the lowest point of the day. So that's when I got that Fibonacci. I found the point of control. That was a big bullish candle as it was coming in. When it started getting rejected, that's when I should have sold, and I should have technically placed my stop loss above that 600 level. Okay, so that's just my feedback. When I go over and I look at my analysis for the day, I'm looking at that. What could I have done better? Why did I not trade that? Yes, it's nice to be patient and disciplined, but I also missed out on a great opportunity there. Okay, so it's all about reading the candlesticks. I'm reading them right now. It's my bad there. Okay, so I got a little bit too disciplined, a little bit too much. Sometimes being a little too disciplined, being as an intraday trader or a scalper, you maybe have to loosen it up just a little bit, but not loosen it up to go reckless, just loosen it up a little bit. Trade without confidence, what you got? And also no break of structure on the 5-minute order block. Yeah, see, I that might be foreign language to me, but I still understand when you're saying order block and break of structure, all of that stuff. Okay, but I just go, man. Okay, so we could have a bearish day coming down. So you see, it came right back up to the highest point. You know, remember it was ignited bearish the entire, and then that just poked it out a little bit. So that's a liquidity sweep, whether you like it or not. Even though it's a low liquidity sweep, they still swept it. You know, that changes the whole algorithm of the market. And look at the bearish volume coming down. So later today, if US30 closes below its lowest point of the day, I'm probably going to push down to this yellow line. I'm going to convert this red zone, green zone to red. It could come back in here and then drop. Again, I could be looking for that trade later on. So we're getting a pullback. Okay, guys, this is also for the sellers in the group. If you sold, you see how it came down to that yellow location? That's a point of interest. You got to learn how to do something down there. Because if you don't, then you'll see these big candles start being produced. And these are big body candles because you're giving away majority of your profit, okay? Like down there, that's 40, 50 pips. Okay, guys, I don't think I'm going to take another trade today. It's 9:55. I got to wrap it up at 10 a.m. We went through a lot today. Okay, today we can call it more of a Friday education session. We had one good setup on gold. So we remember, if you guys go back on gold, remember we were buying down in here. So we had a nice buy. I broke it down on the 1 minute, 5 minutes. And look at it, just continue to drive. Okay, so this big red zone. Okay, now let me just clean up all this noise. Go back to the daily. And remember this big red zone. Okay, look at it, guys. Whether you're trading or not today, maybe just over the weekend, this is going to be interesting. Look at today's daily candle. Okay, so are we going to break up to 34.31 today? Easily, maybe right up to there. Those are those bodies. Next one is, I would say 34.38. Then we're filling up that high up to, which day was this? July 23. Then the next point of 34.50 on the dot, okay? And then that's the last high before the all-time high wick to 3,500. So look at how it's driving, guys. I guarantee you a lot of short sellers are getting squeezed today, and gold could maybe continue driving. If this daily bar indicator closes above here, what you're going to do with that big red zone starting next week, and remember Monday is a US bank holiday, we'll continue on Tuesday, but look, this might turn into the biggest. I haven't, you know, really made this green zone, red zone green since, look at, we've been trading here April, May, June, July, August, September. Like, look at this, guys. Wow. Okay, this could be a complete new uptrend for gold continuing to drive. Unbelievable. Okay. Okay, and NASDAQ is, guys, I got to get off this call because I think I'm really tired today. I don't know what it is, but look at the retest of that red line, man. I got to get off this call. I need to go take a little bit of a break, breather, catch some air. I'm a little frustrated with myself that I didn't catch that sell there. So, but that's it, guys. I hope you guys had an enjoyable week with us all week, Monday to Friday. Yeah, I had a blast on these sessions, okay? And we're going to continue it. Monday morning, I'll let you guys know. Maybe we'll do a live London, or we'll just come in like a 6 to 9 or 6 to 10, just education. I know it's going to be a slow moving market. Maybe what we'll do is a live London session we'll maybe catch some European traders. There's London market is open Monday, so maybe we'll do a 2 a.m. to a 6 a.m. Session. And then remember, US Bank and Canadian banks are closed on Monday for holiday, and then we'll pick things up Tuesday, okay? So, but guys, over the weekend, just please review your journals, review your trades, your good ones, the ones that got stopped out, your break evens, review, learn, like do what I just did, go over. What did I do wrong there? I could have taken that one, could have also got in on that pullback, like, you know, so I made multiple mistakes, but right here, but you see it's trending down. Lower lows, lower highs, lower lows, lower highs, lower lows, continue pushing down. Don't be buying until you see like a second bottom volume, bullish volume closing above, you know, these points of control to flip, to invert, whatever you guys call them. But that's it for me, guys. I truly appreciate everyone on the call. Thanks for everyone. There's a free Telegram link right here pinned showing you exactly, like this is the SST signals over here, you know, showing you what we do here, guys, that promotions for anybody that wants to join, good buys over here on gold. So that is available for you guys. It's free, the Telegram channel. Also on our website, guys, take advantage of the blogs. You know, you'll learn a lot. We'll do more of these now that I know that you guys are interested in reading these. There's a lot. So we'll do these blogs on maybe we'll do one on why it's not great to trade on a US bank holiday. Maybe we need to read that in a blog, okay? So our blogs are available for everybody. Guys, thank you guys so much for the subscribers. Amazing. We're almost at 83,500. It's exceptional. Our goal was today was 420. Thank you guys. We hit it. So thank you guys so much to everybody. Appreciate you guys. Everyone on Zoom, enjoy your weekend. Have a good weekend with family and friends. Enjoy your long weekend if you're going to take Monday off. And everyone on YouTube, we'll see you guys. Maybe we'll do a live London session Monday early. You know, we'll check out the European markets. Maybe we can trade DAX. Maybe we can do like a Euro USD pair. Well, I haven't done currency. I haven't. I think the currency pairs on my watch list have dust all over them. I got to dust them off and bring them up. But I'll show you guys how we can analyze currency. Just like we do indices and gold, I'll show you guys how you can do the same thing with Euro USD, GBP USD. We can do GJ, whatever you guys want. We'll focus that more on the London session. Okay, guys? But I appreciate you guys. Thank you to all the new subscribers. I hope you found a home over here at SST. And we'll continue to help guide you through these markets. And amazing, guys. And just remember, the August is closing and we're starting a new month. Oh my God, gold is on a tear right now. Holy shit. Okay, so it could reach this next yellow level, 3430. My goodness. And to think that we bought the bottom down here. We bought right over here, like this, right here at 725. My goodness, okay? So sometimes you can buy those good moves, and you know, if you got runners running, they can run for a long time if they got nice, sexy legs. Okay, guys, I'm out. We'll see you guys live London Monday night. And thanks for the likes. Subscribe to the channel. And join SST if you guys want and take your trading to the next level. Thank you, guys. I'm losing my voice. I got to get out of here. And I appreciate production for the coffee. Thank you, bro. I appreciate you. Have a good weekend, everyone. Thanks, guys.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.